All right, guys, we are now live. We are going to be doing GME for the first hour and a half, however long, and then we are going to phase into the broad market because there's a lot of stuff going on in the broad market aspects and the news and stuff. So, which is very fascinating, I think, to me. But uh, Tenzin asked a great question before we started the podcast today, and it was about, why is it that shorts have to cover? And for the new apes and retail investors, if you don't consider yourself an ape, because I'm finding that a lot of people don't, which is pretty cool, that why they have to cover, and they don't know this answer, which is fascinating. So, Antimatter, you were giving a great explanation on this. So, if you could start over with what you were saying, I would greatly appreciate it.
Sure. Thanks, Kenna. Yeah. So basically, when someone shorts a stock, they are borrowing someone else's share of that stock. And to simplify things, let's forget about stocks. Let's consider like your phone. I borrow your phone. I at some point need to give it back to you. Now that's the idea behind shorts having to close out their short position at some point. If I borrowed something from you, at some point I need to give it back to you. Now there is one particular scenario that some of us have recently learned about, and it's been the topic of some anime discussions on some Reddit, on some subreddits, if you follow those. But they call it a death spiral, where essentially the company goes bankrupt. The company that someone is shorting goes bankrupt. Essentially, those shares for the company become worthless. So in that particular scenario, the shorts do not necessarily have to close out their short positions, and that's where exception where shorts having to cover really uh, I guess gets highlighted now. Since we will be talking about GME for the first hour, I think that's a key point that had GME eventually gone bankrupt, because I don't think anyone would argue that over the last couple of years that was a real possibility. These hedges that were significantly shorting GameStop. That if they were able to drive GameStop into bankruptcy, they would never have to close out their position. But over the last few months, GameStop has eliminated all of their debt, and not just that, but they've also raised a lot of capital. So GameStop will not be going bankrupt anytime soon. So that's kind of where this shorts will have to close out their short position, so long as they can no longer pay off that premium that they're paying, the interest that they're paying on the loans to borrow. So that's it. I'll hand it back.
That was a great explanation. I like it. But yeah, so it is like, so then that's where it's like the synthetics, the naked, whatever you want to call it, the all of their bad positions, they're debt owed. And if anybody's ever taken out a credit card, personal loan, your mortgage, your car payment, whatever, it's a debt owed. You have to pay it. And so it's inevitable. But at the same time, I do want people to think about, you know, because people are saying, "Oh, well, are they going to get the money? How are they going to do it? Are they going to go bankrupt?" And guys, I can't say they're going to go bankrupt, because at the end of the day, they're a hedge fund. They're hedge funds that are doing this for the most part. I mean, there are some big whales that are betting against stocks and things, so that's just what they do. But um, they are playing the rest of the market. They're playing crypto. They have real estate assets. They have, other stocks. Tech is a big one. Biomedical is a big one. So and they're putting, puts on the SPY, and they're playing the inverses. They're gaining liquidity. So people are concerned about how they're going to have money to cover this. They'll have money. They're gaining it. They're putting it away right now, from what we see. So I'm not worried. We'll get paid, guys. I'm not. The more I've dove into their investment pools and various ventures that they try to do, yeah, they're losing money, but they're also gaining it. So when these headlines of these news articles and things are like, so and so lost so much money, They don't tell you how much they actually just gained on some of, by shorting other stocks or, putting high call options on other stocks. They're making money. Don't let those headlines fool you that there's not going to be enough. Marcus, did you have something to add? I don't think Marcus is here. Yeah, so tonight, there's a lot of very interesting people in here. We have Dr. Trillion in here. We got OG Mama. Yeah, we have America's Money Company. Like, guys, we have some great people. So this is an open mic night. For those that have not been a part of my podcasts. Oh, yes, I see you. I am not a truck. I see you. I swear it. So yeah, it is an open mic. So if you guys want to come up, I am encouraging anybody that has GME DD for this first hour, hour and a half, to come up and speak. You just have to hit the microphone at the bottom, and I will bring you up. So, but other than that, so we've had a few GME podcasts, and I will tell you, like I've read as much as I can. I read all DD that came out of Wall Street Bets before it got infiltrated, and then the GME subreddit, the Super Stonks subreddit. Like, it was. I'm not gonna lie, it was a base. Like anybody that wrote any of that DD, it was a base guideline of how I figured out AMC stuff. That I could replicate it almost, and so I do thank everybody that did the GME DD because that was not me. I had some interlinkings with GME DD, but not a lot. But it's solid. It is solid, guys. Like there is so much information out there, and how DFV figured out the shorts, and the fact that it was undervalued as much as it was. And I had friends actually, that I've had friends that worked at GameStop, and they even had said, like, I don't know if we're going to survive it. And it's sad to see that this company, this nostalgic company, was shorted to all hell to a point where we almost lost it. It'd be like losing Toys R Us. When Toys R Us went under, I think all of us were like, what the hell, so it would be like losing that. And the fact that they are taking the opportunity to, they have this backing, this awesome community backing them that says, hell no, you can't take this company. It has a right in the world. And they restructured. That's the, if there was ever a fight for GameStop in this sense, is that the value that they are bringing to the table. It wasn't like they just oh, we have all these investors, they're pushing up the stock, we have this core blah 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 blah, we're just going to take the money and run. No, they freaking wiped house, brought in e-platform personnel, so Amazon and Chewy and everything. Like they brought in this awesome like team to take GameStop into the, I'll say the 22nd century, because it's not really the 21st. They're going past it because they're looking towards the future with the, cloud services and, NFT stuff. And, the fact that they have Ryan Cohen, anything he touches is turning to gold. So you have that. It's it's phenomenal to see. And so, and then as we know, I don't know if actually everyone knows this. Fry's went under. Fry's Electronics. It was if you don't know what Fry's Electronics was, it was a massive warehouse type store, kind of like Micro Center, way bigger, better than Best Buy type. But they did all electronics. They had computer parts, gaming systems, TVs, radios. It's a really cool store. I loved Fry's, and so. When they went under, there was kind of a void. Like, yeah, Micro Center's still around, but they're not everywhere. And the fact that GameStop's kind of going into the PC gaming industry, like, they're starting to offer PC parts, and they see that that's a thing that needs to be, kind of filled up. Because, I mean, I'm a PC gamer. I mean, I love console. I started off, I don't know if anybody saw that whole thread of tweets that, I started off with NES and Super NES and 64, you name it. I started gaming back in 1990, right, when I was barely walking. And so and then I transitioned into PC. And the fact that they are, looking at cloud gaming, trying to maybe, I heard rumblings of it. So someone correct me if I'm wrong, but, rumblings of, something like Steam or Epic or anything like that. That would be really cool. So, and then I also heard something about them doing NFT for games. Is that antimatter? Do you know anything about that? Anybody know anything about
Uh,
that?
Nothing confirmed,
Nothing confirmed.
of course, but what I know is that they're certainly putting a lot of pieces in place to that I would think if they wanted to bring that vision to light, what they're doing right now, the people that they're hiring right now are certainly conducive to enabling that vision.
That's what I thought. Like I knew I heard rumblings about it. Like I think that's the great thing is that there's rumblings and the possibilities of what they're trying to do, and it's awesome. And I mean, and it's not that it can't be done because Amazon's starting to do it, but they also own Twitch, so that was a smart move on them. Um, so I don't know. Like there's a lot. Like GameStop really did revamp themselves. They'll have the ability. They don't have it right this minute, but they'll have the ability that if they have to get rid of brick and mortar, they can survive. They can survive in a digital world, which I think is brilliant. It is absolutely brilliant. But and then there's also the LAN parties that I'm seeing. I think it was in Oklahoma. I don't know if they've extended it to other places, but the fact that they're setting up LAN party areas in their stores, guys. For those that don't know, like LAN parties were the thing to do when I was growing up. So it would be awesome, to see that. Like, I can only imagine walking into a GameStop and you have like 10 friends that, got on to went in there and wanted to play a game together because maybe they can't afford a nice PC game, right? Or, you may have Twitch streamers go in and, use these computers and broadcast from the GameStop store. Like, there's so many possibilities, local gaming competitions held at GameStop. Like, I mean, it's just very cool. Like, I'm very excited for them and what they're trying to do for sure.
And can if I could chime in and piggyback on some of the uh, points that you were calling out, I'll start off by just I guess uh, a point to some of the individuals that might not be fully bought in on this vision of GameStop. I think it's important to call out that this transformation is only just starting. It is not complete by any means. The rebranding is currently in progress. It is not completely done. If anything, I'd say they're still barely getting over the initial hump, so to speak, just driving awareness that GameStop is relevant again. I have some friends that worked at GameStop a few years back, and, I would echo similar conversations I had with them that you have had kind of some of my friends that have used to work at GameStop years back, they don't want anything to do with GameStop. They feel the GameStop of the future is the same as the GameStop of the past, and I think that's not the case at all. This transformation, it's barely starting, and there's potential for it to be much bigger than GameStop has ever been in the past. And I think that's important for any investor, whether you are currently uh, invested in GameStop, whether you're currently invested in the vision, or if you have doubts. Because at the end of the day, any investment, does have the potential risks. And, short squeeze aside, let's forget about the short interest in GameStop for a moment. There is the potential for GameStop to completely reinvent itself. And the risk there is if they are not successful at doing that. But I think with the hires that GameStop has recently made, they've brought on a lot of executives from big name companies. They have, I think it's hard to argue or dismiss the social and public sentiment from retail investors right now. So they're super relevant. I think they have recently brought on a huge loyalty crowd that really want to see GameStop become successful. And if any company were ever in a position to pivot from potential bankruptcy to pivot and become relevant again, if any company that has done that in the past has had the opportunity that GameStop has right now, I don't think anyone would have doubted their ability to be successful on that pivoting. So I think whether GameStop will successfully pivot, only time will tell. But I think they have the pieces in place, or the bricks are being laid down brick by brick. They're putting together the foundation to be able to be successful in this transformation. And I think, if you believe, and this is not financial advice, but in my perspective, once I felt the sense that it was possible for GameStop to be successful in this transformation, that's when I really shifted my perspective and realized that this was an undervalued company. And when I significantly went into GameStop, I'll say that. But yeah, at the end of the day, whether they're successful or not, that's to be seen. But they have an opportunity in front of them that I think they certainly have the opportunity also to be successful.
Yeah, I definitely agree. And it's actually really interesting. So if this tells you how predatory that these hedge funds can be, and how some of how just shady some people in the higher up positions of companies can be, there was this piece that I read, this was months ago, that I found interesting, that there was a meeting. I'm gonna so butcher this, but again, guys, this has been months, so I'm pulling it really far back from my brain here. They all met at this conference and everything and it was about selling real estate and everything. And there was hedge funds that were trying to basically like get GameStop to sell their stores. Like they went very predatory in very crass ways. Um, and to try to buy GameStop's retail locations. And these were the same hedge funds that were starting to short the stock because they saw the potential for GameStop going bankrupt. And that's the gist of it. But that's what the lengths that they go to, is that they're like, oh, hey, this company might be going under, and maybe we can get their retail space so that we can actually make more money off of this company that might be going under. Like it's predatory, it's disgusting. So the fact that they're coming back, they are no longer in debt. Hell yeah. Hey Prawn, what is going on?
Hi, Kenna, and everybody. First of all, good evening. I'm speaking from very northern part of Europe. It's time here to actually be sleeping, but I woke up in the middle of sleep and couldn't sleep, and I saw this podcast going on. So just when I was listening to Antti, I actually um, liked his opinion very much, and also wanted to share my few opinions, my personal feelings.
Oh,
Is
of
that
course. Of course.
yeah,
That's what we're here
yeah.
for.
Since just like Antti mentioned, GameStop is in a huge transformation at the moment. At least that's what I personally feel. So their operational expenses must be very high at the moment. Like they are changing their business, shifting their business, hiring top-notch people. So it is also very likely possible that GameStop actually might not issue dividend in the near future, considering how much expenses they have. So we as an investor must be also prepared for that. Meanwhile, we know that many of us are expecting MOAs, and the reason or the trigger being the dividends in the form of NFT. But what I personally feel is that issuing NFT dividend at this point, when brokers are not ready, the clearinghouse and such are not ready to issue such, I think it's going to be a huge legal challenge for GameStop itself, and we might not get what we want. I have been already confirmed by my broker, eToro, which is like the most popular here. They are not going to issue any kind of such like NFT type of dividends. They will just simply credit me with whatever the value they feel that's reasonable. So it's going to be a time-taking process, and what I feel is that the NFT, whatever is going to be developed, is going to be for some other purposes, like for gamings and some other experiences. Recently, I have also seen some tweets from Mark Cuban about the AR, VR, and also the use of NFTs. So I think GameStop is also doing something else with the NFTs, but not exactly for the dividends in the short term. So I just wanted to warn everybody that instead of like dividends, let's hope GameStop rather announces something like mergers or acquisitions, partnerships with OEMs of hardware and like computer parts, and then also beat the like bearish analyst expectations in terms of earnings. And yeah, so I just wanted to like let all of us know.
Yeah, for sure. Thank you. Yeah, and that's something that I do try to, kind of, I don't want to say harp on, but kind of remind everybody, like, we can have guesses, we can have hopes, and we can have, things that we look forward to, but, I try not to hype anything like that. Because like, so we know about FUD, and everyone knows FUD, fear, uncertainty, doubt, but I'm coming across positive FUD, right? Like this is a thing, and it's a deterrent that, like that's why I say don't hype dates. Oh, we have this new regulation coming out, we have this new rule coming out, and if we start hyping too much, if we start doing too much positive FUD, and this is for any stock or any investment or anything, and it doesn't come to fruition, then that can deter the newer investors, right? People that only just hopped in the last day or week or month or something. That's people that haven't been around since July or before, or whatever. I shouldn't say July, January. Sorry. People that are just brand new to the game, I'll call it, that then they get disappointed, and they're like, well, why am I in this if this doesn't happen? If these apes don't know what's going on, they have no guesses because everything they say is wrong. It becomes kind of like positive FUD, and I don't want people to get caught off guard with that. So that's just something to be mindful of. It's good to hype it up a bit and say, yeah, we have this potentially. Be careful with your wordings, I guess is kind of what I'm saying is, don't say, yeah, we're going to get dividends. We're going to get blah, 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 or they're going to do this, because we don't know unless you guys are just somehow working there. And then I don't really want to know because that's inside trading. We don't know. We're all guessing. We're going off speculation of what we see on news and media and different Twitter accounts and whatnot. It's like we're guessing. We're shooting in the dark with a lot of that.
Yeah, and it's funny you mentioned that. I've mentioned to some of my in real life friends that kind of jokingly but kind of seriously that the get rich quick, emphasis on quick, play for GameStop, that opportunity window has likely already passed, but because we don't know, these short hedge funds that have massively shorted GameStop. We don't know how long they can kick the can, like you were mentioning earlier, Kenna. For those that might not be as familiar with when or how or why margin calls would happen. You don't just get margin called on one position. You get margin called essentially on your portfolio. You might be bleeding a lot in one particular stock, but these hedge funds likely have many other positions, and they could keep kicking the can without getting margin called if they're doing great in their other holdings. And then once they are margin called, all that really is just, hey, you need to, it's a call, it's a demand to deposit more money. So if they have more money, say in crypto, they can liquidate their crypto and, get fiat and deposit that into their balance to increase their amount. So, again, we don't know how long they'll be able to keep this can. But yeah, I think setting expectations where, and that's why I'm kind of alluded to earlier, where short squeeze aside, I think the potential for GameStop to really become a much larger company is where the focus really should be. The short squeeze itself, in my perspective, is only it's the cherry on top, right? Um, I've also, I have mentioned, I think it was on one of the previous podcasts, I made a comparison to Apple and giving credit where credit is due. DFV made one of these comparisons in one of his streams late last year. But for those of you that may not know, Apple in the 90s, according to Steve Jobs, they were 90 days away from bankruptcy. If you look at the Apple from today, you would never, most people, in my perspective, most people that did not know about Apple in the 90s, most people today would not believe that Apple was that close to bankruptcy because they are such a successful company today. Now, imagine if you believed and bought into the vision of Apple and their ability to pivot when they're that undervalued in many regards. If you invested in Apple at that time, had the conviction to hold throughout all the years. For most people, unless you invested in crypto in the early 2010s, for most people that would probably be the investment play of the lifetime. And I feel I feel where GameStop is, where they were just a couple of months ago, parallels in many regards where Apple was in the 90s, that they have an opportunity to pivot, an opportunity to transform, and an opportunity to become relevant again. The question is, will they be successful in doing that? And if you believe in their vision, I think it's a no-brainer. Even at today's stock price, I think they're only about a 10-11 billion dollar company at today's stock price. I think easily at least like there'll be 50 billion once they're able to be success if they're able to be successful in this transformation.
Yeah, for sure. And that's, that's the biggest part of it is, we have to look at past stocks. Like, I mean, history repeats itself, or at least rhymes, and things happen very similarly throughout different companies. So I think, like Apple of all things, right? It's very interesting, and we're going to see a lot of similarities. I think people compare this to Volkswagen, and I think it's going to be a much larger scale of what happened with Apple and like Tesla and things. I do have a few things to relate. So first, from YouTube, from Johnny Dankseed, which is a funny name. So he says NFT stuff is most likely a Pokemon deal, which Brent has talked about quite a bit. If you haven't heard that, there's a whole podcast about Brent's Pokemon theory, which is great. So you guys can go listen to that. He was supposed to be on this weekend, but he's not feeling very well, so we're going to reschedule him and an extra special guest from him. but hopefully we get to talk to them soon. Based on what they've been importing lately, you are allowed to tap into public data, though. Here is a site. Apparently the site was not posted. They'll let you keep track of what GameStop is importing. As of late, it's just been things that normally would be similar to what ThinkGeek imports, but with a lot of focus on nostalgia market. Tons of focus on Pokemon lately. Thought they were importing arcade cabinets, but I track it down, and that is not the case. And then I also have from Conway, who is a massive just institution to the GameStop community. He has done so much work, and I cherish a lot of his information. He's not going to be able to come up right now. He's a little bit busy. But I did invite him to come up whenever he is available. But he said to relay this. Let's see. Here's something new. The concept of credible threats. The NFT dividend is a credible threat. It's an ace up the sleeve. The Fed saying it was going to start buying corporate debt was a credible threat that encouraged people to buy into the stock market during the market crash of 2020. I remember that. There's an old allegory of gold making machine. If such a machine exists, it would drop the price of gold almost overnight. A similar thing happened with in real life with amethyst. When an enormous amethyst deposit was discovered, it dropped the price of amethyst immediately. That's what the NFT dividend is. It's an implied threat. Fix this shit or else we will. We know what you did, and we will F your whole world up. The prospectus is the same thing. We will withdraw our shares and find a new depository that we can trust. Fix the shit or else we will, and when we do, it'll F your world. So that is from Conway. So thank you for that. Think about that for a sec. Implied threat. It's literally the idea that, okay, if somebody says every day, I'm going to beat you up. I'm going to beat you up. You don't know when I'm going to do it, but I'm just going to kick your ass eventually. It's an implied threat. That person lives in fear every day that you're probably going to beat the crap out of them. But if you just did it, it would be done and over with, right? Like it's kind of the same thing. Like it's a buildup. It's a buildup. Okay, when's it going to happen? When's it going to happen? And and it's a kind of a smart move, in the sense that they're going to catch them off guard. Like right now, it's like, oh well, we're going to do this. We're going to do this. We're going to do it. But when are you going to do it? Well, we're not going to tell you that. It's, you have a chance to correct what you're doing before we actually do it. And they're not doing that, guys. They're not fixing anything. They just keep digging the hole. They just keep, they're past China at this point. No offense. I didn't mean that. The old adage, you're digging to China. They're past China. They're going to the moon at this point. They're digging their way to the moon through wormholes and other bullshit. So I know, weird analogy. I'm not David versus Goliath. I don't have good analogies. I'm sorry, guys. But it's going to be interesting, and I look forward to it, because I know this is GME, but I follow Meta and Meta materials. Like George, he wants to burn the shorts. Ryan, he wants to kill these shorts off more than anybody. They want a fair market, and so they're past 5D. They're like 7D chess at this point, and they're just playing mind games. Like they figure if they're going to play mind games with the average person and these corporations, well, payback's a bitch, and karma's coming. So I love that, Conway. Thank you for relaying that. Harambe, what do you got for us?
Pretty much, I was gonna continue on the cash equivalent idea that the NFT is probably gonna be some sort of thing to do with gaming, and it's gonna extend like a Steam market idea, and that it may not be a dividend, which it might not be, but at the same time, it could. But the cash equivalent, like verbiage in particular, anybody buying synthetic shares, you're buying a cash equivalent. That language is used all over the place for pretty much everything. So I don't know. I wouldn't use that as discouragement towards an NFT. Yeah, because I've just read that everywhere.
So you're saying you're seeing that people like there is no NFT dividend. It's
just in terms of what Prawn was saying. I was going to respond to that.
Oh, I see. Yeah. I mean, and that's why it's like, that's why we have these discussions, I mean, there's, again, have a million different people talking, somewhere in there's the truth, right? Like, I mean, somewhere we can figure it out. I don't know. I honestly don't know. I mean, it's not out of the realm of possibility because, like, so the only recent thing I can think of it was very odd for a company to do was like Torchlight before they merged with Metamaterials is that they offered a preferred share dividend, and it was a 1-for-1 offering, so that you got however many regular shares you had of Torchlight, you got one. You match the same amount of preferred share for dividend, and then it's based on the cost of however much they sell their land and all this other stuff for. So it's not out of the realm of possibility because, like, I mean, if you figure, I mean, think of the random things that they've released. Like they released that NFT website, and there's this whole thing with Pokemon. There's all kinds of interesting things, and
yeah, the Pokemon thing's interesting as
yeah,
well.
and so
a Steam market idea is interesting. Mm-hmm. Who knows what that thing's going to be?
Yeah, and I don't rule it out. I mean, I don't rule much out anymore because, well, it's 2021 and it seems to be like a weirder year than last year at this point. So I don't rule it out because they are trying to get into the digital world, right? And NFTs, they're hot right now. Like, I mean, you have all the sports teams getting into NFTs. You have, celebrities getting into NFTs, musicians, and you can you can actually do an NFT on a house. Did you guys know that? It's weird. It's all kinds of stuff. And that's why like all next week is about NFTs, so we can actually learn this stuff. So, I mean, even if it was like a crypto dividend or something, I know some Prawn, that you said that they don't have enough money to do it. And I mean, yeah, they have expenses, but it wouldn't be out of the realm of possibility to take on a small portion of debt to give to their investors so that the investors will actually invest more because they have that possibility of a very rare dividend at that point, and so that is actually heard of. Like, so you have people saying like, oh, AMC could release a dividend. Well, AMC also has a lot of debt, and this is not trashing AMC, guys. I hold AMC. I am an AMC person. I feel like I need to say that every 1,000 times. But it's a compare and contrast here. So, and you have, the float of GME is a lot smaller than AMC. So, if there were ever two, between the two, I would see GameStop doing a dividend of any kind, NFT, crypto, regular, whatever. I could see GME doing it more before AMC because of the fact that they have no debt, the transformation that they're trying to do, and, just the team that they have behind them would probably be encouraging it. So that's just kind of my thing on it.
Yeah. Wild card. Absolute wild
It really
card.
is. Marcus?
Love it.
Marcus, you raised your hand, or?
Yeah, I actually believe that GME should probably take a look at having their new CEO interact with their audience the same way that Adam Aaron does with AMC. I think it would benefit the advancement in the GameStop movement. I've held GameStop for a while now, held AMC for a while now. I think as a general public and as people that are retail investors invest in game more and more and more to push that stock higher, I think it would be a great thing for the CEO to engage the retail investor more in order to push that higher.
Okay, run that past me one more time. My brain did not absorb that for some reason.
So the CEO of GameStop right now, I think he should start to engage the retail investors more, the same as Adam Aaron has for AMC, which I think will benefit the stock.
Yes and no. I agree that he might want to, but also it could be a foot and mouth type situation. Like CEOs engaging with the community, like on Twitter and stuff. I think it gets a little bit tricky if you don't know how to watch your mouth. Like Adam Aaron, I think with Adam, he's definitely put his foot in his mouth a few times on Twitter, and that's unfortunate because I think, like Ryan being a board member, somebody that's not a CEO. So, these lower level people, second in command, hell yeah. People in marketing and anyone like that, like, yeah, 100%, because they know what to say and how to say it. And that's what they specialize in. The CEO, I'm a little weary of it. Like it because then you worry about, like, a type of market manipulation because the CEO is saying things, if the CEO, if I don't know, they had some fun one night and they were like, such and such is going to happen with GameStop. I don't know, and you can't control people at that point, but it just gets a little bit a gray area, if you know what I mean. Like I get what you're saying. Yeah, it would be nice to hear from them once in a while, 100%, but even D's like, will he keep his shorts on? Yeah, that's like that whole situation, like him going on Trey's Adam going on Trey's YouTube or whatever, and not having shorts on, like, that created a meme. Granted, yeah, they're quote unquote meme stocks, but that's not a good look. That's not oh God. I still see this picture all around my Twitter and everything. So, it's I think like it's tricky. I think they're doing it right with Ryan being the one to, engage a little bit more.
I think what I meant by engagement is whether he needs to do it through his other sources. I think someone needs to step up in that company.
Oh yeah, 100%.
And put out a little more attractant to the retail investor. The Adam Aaron standing up with his pants not on became a great meme thing, but I think it also drew in a huge crowd of people that maybe didn't believe in the stock, maybe didn't believe where it was going to go. And I think if Game or anybody else who's in this, let's call it quote unquote meme stock era or zombie cult or whatever we're calling it these days, I think if you'd have more engagement with the retail investor, I think it would make a huge difference.
Yeah, someone on the team. Hell yeah. I agree with that. Cousin, what's going on?
Hey, how's it going?
Not too bad.
Good. I'm gonna be in and out, and when I'm done work, I'll probably be hopping back on and trying to maybe speak a little more, if that would be all right. But in the meantime, for the moment, I wanted to comment on Ryan. I mean, he told us what he's doing. He's going to be speaking with his actions, not his words. He told us that at the shareholder meeting. So I'm fully supportive of that. I don't think they need to tell us what's going on. We know what's going on. We see it. We see it every day if you're looking. Props to Adam Aaron for doing what he's doing. I've spoke on some of these calls before, and I think it's a great thing that he is acknowledging and listening to the shareholders. If you're an AMC holder, that's a huge asset for you. But Ryan is different, and he's playing a different game. And the social media team that they have is talking to us and engaging with us and letting us know what's going on a day-to-day basis. I don't think Ryan needs to say shit. I think Ryan's got a plan, and he told us he'll be speaking with his actions. So that's where I think with that.
Yeah, and if I could piggyback off of that, Cousin, around late last year, um, Ryan Cohen wrote a letter to the board of directors with, he listed out problems that he sees with GameStop, and told them essentially um, what they should be doing to address those problems, but stop short of saying how. But one of those problems that he called out was, the leaders of the company, the leaders of GameStop at the time, they were, um, how should I say, they were uh, communicating out their intentions ahead of time, so that these bad actors, these short hedge funds, knew in advance what GameStop was doing. And Ryan said that is a problem. We need to treat GameStop like I treated or managed Chewy, where I didn't broadcast out preemptively what we were doing. We weren't broadcasting our moves so that people could use those to their advantage. And exactly, cousin. Yeah, I think like Ryan said, judges by our actions. Uh, Point in case, I believe it was the Q1 earnings for this year. Their site that they use at the time actually hit the viewership limit. So there was one of the mainstream media
Yeah.
people that were unable to join the actual broadcast, the live broadcast, because it was at capacity.
Yeah.
And they commented that this has never happened to them before.
Yeah.
Not them, not GameStop, but them, the mainstream media. They've never had an earnings call for any other company where they hit the broadcast limit. So for Q2, GameStop also put out an official YouTube link to make sure that everyone's able to listen in.
Yeah. And anybody that if you have not read Ryan's letters to the board, his earlier letters to the board, I highly, highly recommend you do so. Anybody that hasn't, because if you want to know what the plan is, he lays out the plan. He tells you what he's doing. He criticizes the shit out of him. He says, yo, you guys are doing this, and this right, but you're doing this, and this wrong. And you're doing it very wrong. And he even brings up, he's like, you got a new console cycle coming up, and you're going to look like you're doing good. Your sales are going to be up. I see you motherfuckers, and yeah, that's not good enough for me. And you might be used to shareholders that don't give a shit and aren't paying attention, but I'm the big dick in town right now, and you are going to pay attention to me. You're going to listen to what the fuck I got to say. I mean, that's how I interpreted that letter.
Exactly, and again, if the company is able to be successful in their transformation, well, the guy leading the company, the chair of the board of directors, he in that letter listed out what they're doing wrong and what they need to do to fix it. He's the guy that's ultimately steering the ship right now. So whether they're going to be trying to pivot or not, I think that's not a question. The question is, will they be successful in doing that? And from what I've seen, my thesis is they have no reason why they will not be successful. That's what, unless I see something that tells me otherwise. I'm convinced they will be successful.
I mean, if you look at their last earnings, they've already proven that they're successful. They're already up in e-commerce. They're already, I mean, I don't know what more you could ask for. It's been so amazing watching the plan play out. I mean,
Yep.
it's just been the most amazing thing to just watch everything, as it happens, just to see what the plan is going to be. We're going to do XYZ, and then to actually see XYZ play out. It's just been such a exhilarating thing to see. I mean, that's when when I see, back a few months ago when people were like, oh, DFV might have sold. And, I just feel like you weren't fucking paying attention if you have to even consider that that's a possibility. And not for any big thing. Like, I believe he probably had a weight on his shoulders, and, there's a lot of pressure. Like, people are going to pay attention to what he's doing. But if you watched his early videos, like if you watched how passionate he was and the ideas and the thesis that he laid out, this shit is just round two. You know what I mean? This is the second inning of a game. And we're just getting started. So there's no question in my mind that he's just, just enthralled with what's going on and just, watching it play out. And until you even get, he's not even halfway through his thesis. So I don't know. Not that we need, like I said, it doesn't matter what he does. I don't think that you were paying attention if that's how you felt about it, a few months ago, if that was even a question, because I just don't see it. He had too much passion about it. He knew what was going on and what was going to happen, and he was watching it all play out just like we all are.
You guys are awesome. I've been over here just kind of giggling because there's just so much passion behind it. It's great. I appreciate it. Cousin, you brought up some really great points, and I'm going to reach out to you and pick your brain some more, if that's cool.
Absolutely. I would love to.
Hey, cousin, give me 1 second. I want to ask something to Conway. Conway, I know that you liked the tweet from Zip Charlie. Do you mind explaining what he said about GameStop in particular in this chat for everybody, please?
From what I understand, Conway is a little. Oh, cool, great, awesome. Hi, Conway.
What's up, everybody? Sorry, could you finish the last part of that question? I didn't hear the last part of the question.
He mentions that he put a list of 7 most heavily bought puts companies of 2021 second quarter by hedge funds. And he showed the list of Tesla, Microsoft, Apple, and then what else? American Airlines, AMC. No, Tesla, Microsoft, Apple, and then Tesla, Netflix, Microsoft, Apple, and then he posted AMC, and then American Airlines, and then 2 other companies, and then GameStop was the last one. That has the least amount of puts out of all those companies.
Okay, but these are all the most heavily.
Puts,
these are the ones with the
short.
most puts, right?
Yes.
Right. Okay.
Did you watch this video yet?
No, I know who Charlie is, but I haven't watched his videos in a very long time.
So since you haven't seen it, do you mind if I explain it?
Sure. I think I probably have a different explanation. But
you haven't seen his latest
what
video yet, so how about you watch it and then tell me what you think? That would be nice.
Well, how about this? Since you watched it and we've got a bunch of people in the audience, why don't you explain it, and so that way we can all catch up.
Okay, and once I finish my explanation, if anybody wants to verify and what they think, please visit his video and watch part. He didn't speak much of it, but what he's basically saying is that the hedge funds are really looking for a market meltdown of some sort, obviously, because they think that the government is going to taper and inflation is going to go high. So the higher multiple companies like Netflix and Microsoft is going to suffer, even though Microsoft is over $300 now. Like, what the fuck? But yeah, they think a lot of things are overvalued. But then AMC and GameStop has a lot of put contracts on it too. And he said that this situation is a bit more complex. Obviously, we know that. But what he thinks is that when the market's going to go down, and it's probably going to go down by end of this quarter, and when that happens, it's going to amplify. All those put contracts are going to amplify, because once they release the put contracts, like when GameStop runs to 340 and then they exercise a bunch of put contracts, and that's when the price crashes down. So they're probably going to try to amplify more pain on us when the market goes down. They think that we're going to sell our shit. And this goes for MC guys too. You can call me a shill, I don't mind. But yeah, they're going to amplify the damage on us, making it look higher than it is. So just be ready for it, and it's going to come sooner or later. Just it's up to you if you want to hold it or not. Just know that they're going to put maximum damage on us soon. Thanks.
Okay. Okay, so I think a lot of people think that the market is going to correct or crash soon, and I definitely think that as well. But the important thing to realize here is that nobody actually knows if the market is going to crash, right? You can cite whatever indicators you want, the Buffett indicator, whatever, right? Economic reality, record high unemployment, all this other stuff. But the fact of the matter still is that nobody actually knows if the market is going to crash. Now, if you've been paying attention to like the filings that, Trey and Charlie have been putting out, Monkey Business and Charlie have been putting out, it certainly seems like they're getting ready for that. But as crazy as it sounds, you still don't know if the market will crash or not. One thing that is possible is that well, first of all, everybody's really nervous about a market crash, right? And you can see it kind of in the behavior of the markets. A lot of things are just trading sideways. A lot of things are down. S&P and Dow keep hitting higher and higher highs, but the rest of the world looks like they're not doing so well. So again, as crazy as it sounds, it's actually possible
Oh yeah,
that the market goes way higher than anybody expects.
Conway,
I'm actually
sorry. Go ahead, Kiana.
I was gonna say, Conway, you actually brought up a good point with that. So, and you know that I track everything based on patterns, right?
Yeah.
And the market could definitely still go higher because of the MOAS, right? You know, you have all these stocks, you know, connected with the ETFs and everything, and those are all through the NASDAQ and the Dow and stuff. So yeah, the market still could go higher, but eventually the balloon has to be released at some point because you know, people will sell off, institutions will sell off and stuff. So, you know, and that's something that I'm also looking at, because that's why I tell everyone, like, yeah, I look at inverses. I don't touch inverses because, well, there's still going to be an upward trajectory when the shorts start to cover. You know, it's not just AMC and GameStop that are shorted. You know, you have Nokia and BlackBerry and just other tech institutions, and hell, they've shorted, you know, treasury bonds and the NASDAQ and the Dow. They've shorted half the market, if not more. And so eventually when those shorts have to cover, the market will go up and then it'll come down, in my opinion.
Okay, so one thing, it's not that I don't agree with your opinion, but I do want to say is that I've looked at a bunch of hedge funds that are like super big hedge funds, and I've also looked at Michael Burry's portfolio since beginning of this year, and I'm tracking it hardcore. This guy himself is buying puts on Tesla, and
Yep.
he didn't buy it on Netflix. He bought it on ARK, so he definitely hates high multiple companies. And then the list that CNBC published today that says those 10 companies name, and the GameStop being one of them, but I don't see banks in there. I don't see ships like Norway Cruise or McDonald's or I don't know. I don't see Lowe's and Home Depot and Walmart in there. What does that tell you? Market correction versus market collapse. Market's not gonna collapse. I am totally against market collapse. Market's not gonna collapse. 2, well, that's my opinion. And when that time comes, you can slap me. I'll take a banana and shove it up my whatever. But it's not happening. 2.
Yeah.
Second,
So
Proof or ban.
I know,
second
right?
thing,
no proof. I'm good, dude.
Hey,
banana.
we're recording this call, right? We got
All right.
someone's got this documented.
We have it documented. We'll timestamp this at
Look, all I'm trying to say
57
is
minutes.
that 10 names in that list, and comparison with Michael Burry, the world's biggest freaking bear, it shows that he doesn't think the market's gonna collapse. He thinks that higher valuation companies are gonna get released to a lower degree because people are not gonna be able to pay for that high PE forward ratio. So yeah, Conway, just to say that if you want good dips at that point, you'll be able to get it. But I don't think market's gonna collapse, and nobody should buy inverse and all that. I mean, Michael Burry himself is not buying puts on SPY. Okay, he's not buying puts on QQQ, but he is buying it on ARK, and that should tell you what I'm trying to tell you. Thank you.
Yeah, I mean, back up a little bit. I wouldn't say that Michael Burry is a bear, right? I mean, he goes long on plenty of things. He's a value investor at heart, and looking at the fundamentals, he just goes by the fundamentals. So strictly speaking, okay, I love Tesla. I wish them well. I am an investor in Tesla, but looking at the fundamentals from that perspective specifically, Tesla is overvalued. Same thing with ARK in general, right? So why did Burry buy puts? Well, because of the, what he would say, overly bullish nature of people in Tesla and ARK. What it has done is it has made puts artificially cheap. Okay, so because the puts are so cheap, it can gamma squeeze. Okay, now gamma squeeze, we saw that in January, right? With GameStop and the other meme stocks. That wasn't a true short squeeze if shorts never actually closed their position, right? It was more delta hedging that led to a gamma squeeze, it has to do with options. Gamma squeezes can also go down. And so that's the play here. Okay, so in Burry's mind, Tesla's valuation is the equivalent of an automaker that makes, like, I don't know, 40% of the world's cars, but it only makes 1% of the world's cars, something like that. Okay, I don't remember the exact numbers, but this is roughly the relationship. Okay, and this is how Burry is thinking about it, to the best of my knowledge. Okay, I also follow Burry and track his 13S Scion Asset Management, or Scion Capital, whatever it's called. So that's why he goes so heavy into the puts with Tesla and with ARK. Fundamentally, he considers them overvalued. From a value perspective, they are overvalued significantly. And so because of that, the puts are really cheap, and smart money knows that, and they've taken out puts as well. It can gamma squeeze down when institutions delta hedge. You mentioned inflation, and this is a tricky topic to talk about, because everybody seems to think that we're going to be getting inflation, if not hyperinflation. And Burry has talked about it too. He also has a massive bet against US Treasuries. And
I don't blame him.
personally, I don't understand that perspective. I think Burry's going to get wrecked on his bet against US Treasuries. I think he's just going to lose his freaking shirt on his puts on TLT.
100% agree. He's going to get spanked by the Treasury, probably within 6 months.
Well, wait,
I agree.
Have we figured out our debt ceiling thing yet?
Hey
The debt
guys,
ceiling,
I have some
I don't
puts
think
on
matters.
US Treasury too, just so you know. So let's see whose money talks.
I mean, you're fighting the Fed.
Hey man, listen, my chicken price went up by $1.50 per pound since last year. So I do believe in inflation, my friend.
Well, and
That's not inflation.
I can
Look,
actually.
people. Okay, most
What's
people
that? What's
think.
that? It's not inflation. $1 increase on a per pound of chicken. What is that?
No. Listen to me.
EA, you're Canadian, and we pay $25 for 12 beers. So I totally get it.
Hey, listen. So
Thank you.
I was looking at this. I was looking at a chart of SPY earlier today, and someone had drawn some lines on it, and they were all matching up perfectly. So I mean, obviously, SPY is just going to keep going higher. Stonks only go up. That's my piece.
All right, guys.
Okay.
All right.
I'm going to explain this. It's going to take a while, so just hear me out. I'm going to ask some questions so it's a little bit interactive, okay? People think that inflation is when prices go up, okay? They see prices go up, they think that's inflation. But they don't consider two big things. One is supply chain disruption, and the other is base effects, okay? So when they measure CPI, part of it is they're comparing it to what things cost a year ago. And if you think about a year ago, the world was in lockdown, okay? Tons of industries shut down, which means that factories, manufacturing sector, even like farms, the production all took a nosedive. Okay, so we had limited supply. In some areas we had the same demand, in some areas we had less demand, in some areas we had more demand. Okay, lumber is one of the most famous examples, right? Remember all the memes of like lumber costing a shit ton of money? Well, what happened there? It was all the people that were stuck at home. They suddenly wanted to do projects. They were building decks, they were doing woodworking, all this other stuff. Everybody ran out and bought pressure treated lumber, pine, Douglas fir, whatever. And so that was an artificially high amount of demand. Okay. When mills, we had mill curtailments, we had shutdowns, we had limited supply from that. So of course, like supply and demand, right? When you have a lot of demand and a very low amount of supply, people are going to overpay for that stuff. But is that inflation? That's not inflation. It's just a disruption of the supply chain.
Well, we also
right?
have, so I will counter you on this, Conway. This is something I've been
Okay.
looking into. But no, you're absolutely right. The artificial inflation, that's one thing. But the deflational value of our dollar has been happening because we did print so much last year and this year. But I'm also looking at, so like the CPI, I found this very interesting. My husband and I were looking into it. when they do the CPI numbers, they actually don't use the same metrics year after year. So like the metrics that they used last year to calculate the CPI is different than the year before, than the year before that, and like, so they could be taking things from, you know, like lumber and goods and services, like certain different sectors and all tech companies, and then like the next year they could be doing totally different markets, and that's how they've been calculating the CPI. So like it was actually, I'll have to find it for you, that they're screwing with it. Like they actually aren't using the
Yeah.
same metrics, and I'm like,
Yeah. So the other name for CPI is CP lie.
yeah,
It's
right.
because the CPI or the PC, whatever you want to use, okay, they're both different measures of inflation. PC is inflation minus what is it? Minus food and energy.
Mm-hmm.
It's politically motivated and manipulated to show a good picture. Okay,
Yeah.
there's some metrics of inflation that showed that we had double-digit inflation, but the CPI print was always at 4 to 5%. Okay, and that is high. That is high. When the Fed says inflation is transitory, though, they're looking at a different time frame than other people. Most people are looking day to day, week to week, month to month. And if you look at month to month, it's been bad. It has been bad. From the Fed's perspective, when they say inflation is transitory, they mean like a year or two. Okay, backing up a little bit, money printing. Okay, the Fed doesn't print money. Some people in the audience are going to be like,
what I mean. Yeah.
Yeah, so some people are going to be like, of course the Fed prints money, but think about it this way, okay? What the Fed is doing is quantitative easing, okay? So imagine this scenario. Let's say, EA, you're my roommate. You're a commercial bank. I'm the Fed. And I say to you, hey, EA, since you can't do anything with your money, why don't you go out into the market and buy me some bonds or like a gallon of milk or whatever, okay? So you go out, you use your own money, and you buy the bonds, and you bring it back to me, and I say, hey, thanks. Here's the money that I owe you for the bonds. Okay, I'm reimbursing you. Did you make any money buying bonds for me? No, you didn't, right? You used your own money to go and buy bonds. So what is the net effect? I paid you some money. So I, as the Fed, on my balance sheet, you know, I'm minus so many dollars, but I'm plus one bond. And I'm the Fed, so I can just pull money out of thin air. Okay, so that's where people get confused. They think that that is money printing, but really it's the opposite. Okay, I'm removing bonds off the market. Bonds are future dollars. So I'm removing money from the future, bringing it into today. So it's actually deflationary. It's not inflationary. Okay,
Which is what causes our dollar to go down, isn't it? The value of it or whatever.
It should be the opposite. It can be deflationary, it can be inflationary short term until it becomes deflationary. This is a wild concept to wrap your head around, okay? But if you think about it, these bonds have maturities, right?
Right.
So when hedge funds short it, okay, and they shorted it 4 standard deviations in that short, at least in the 30-year, okay, TLT. That's crazy. When hedge funds short U.S. Treasuries, they're taking money from the future and getting money now. And because there's this flood of rehypothecated treasuries on the open market, it devalues the currency somewhat now, but specifically it devalues the currency in 30 years when those, or whenever they mature, okay, whenever those treasuries mature.
So do you
okay,
know,
and this is, yep.
back in 06, 08, what the stance was? This is something because I'm trying to work on the comparison of that time frame to now. Do you know of how many bonds we had like this same situation? Because they did kind of the same thing back then too. Are we starting to, do you think that's what we're seeing right now is the effect of those hitting our economy?
I think we're talking about slightly different things. And
so,
I'm not
Yeah,
really...
it was much more riskier back in the days, and they had way higher return on bond swap and mortgage-backed securities, which was like CMBS, and they had a higher return than shorting bonds. So back in the days, it was a little bit more extreme.
Yeah. But so let's get that out of the picture, okay? Part of the problem is that the memes are too freaking good, Okay, everybody has seen the meme of Jerome Powell cranking that money printing machine. Okay, and everybody's talking about inflation, inflation, inflation. Especially who? Especially the mainstream media. And who do we not trust? Probably the mainstream media, right? They probably lie to us. Well, why do they lie to us? What do people do when you actually think that inflation is coming? Like for real, like real inflation, not fake inflation,
You
right?
go and buy a bunch of shit.
You buy a bunch of shit. Exactly, right? You stock up now before prices get too expensive because your income's not going to catch up to it in time, right? Income is usually reactionary. That's why we've had the same minimum wage for forever,
Way too
right?
long. Yeah.
Right. So you buy gold. Guess what? Gold is down. You buy supplies. Guess what? Supply chains have more or less fixed themselves, so supplies are cheaper now. And what are you not buying? You're not buying stocks, right? If you have money, then yeah, you're buying stocks and you're getting richer and richer. But if you don't have enough money and you have to make these decisions about what to spend money on, you're not buying stocks. So the rich are getting richer. Specifically, what are you not buying? You're not buying GameStop. You're not buying AMC. Whatever meme stock you're into, you're not buying that, right? So you're not applying pressure on short sellers that don't want you to buy this stuff, right? So maybe, I'm not accusing, I'm thinking maybe that's why the inflation narrative is being pushed down our throats so often.
So, okay. So I don't know. Like I maybe it's because of where I live or something, but I will say there is an increased cost of living. I don't know if it's
Yeah.
inflation. I won't say that. But the fact that when we do our hurricane prep, right, back in June, we do our hurricane prep, you know, our water, our canned goods and things like that. You make sure that you're okay whenever, if you get hit by a hurricane. The year prior, it was under $200.
Yeah.
And this year it was $280.
Mm-hmm.
And it was like
Yeah, so
it was like a 32% increase in June, right? Like we're in August now. So and it's like I've, you know, I am a very big advocate of like scanning our receipts and, you know, keeping track, 'cause it's historical reference here. And I know I'm a nerd, guys. I get
no,
it.
no. Mm-hmm.
No, there's people in there going, "Wait, you what?" So, but no, I've been very curious about this over the last couple years, and so you know, just in the last year, like our basic necessities because of our child, you know, her diapers and wipes and you know, foods and things like that. Like we tried to buy an exact list that we bought last year, and it went up 82%.
Yeah.
What? Like
Yeah.
I was
So
baffled. It's baffling because you have people like, you know, like we're yeah, we have our photography business, but we also have a fixed income with my husband being a disabled vet. And so, you know, that money, you know, if you have people on disability or anything like that, that only goes up so much a year. And so I'm like, if people are living on a fixed income and that's all they have, we're in trouble. Like that's in my head. Like that, so maybe you can touch on that.
Supply chain was a huge factor this
supply chain.
year, not
Yeah.
only because of COVID, but it was also a huge. We had an ice storm in Texas. We had you know,
Yep.
I live in Canada and I run a monster construction company. And we're still seeing the effects of supply chain from a perspective of a factory burning down that makes the epoxy, that makes electrical components and breakers for your panel for your house and everything else. Supply chain was an underestimated thing in inflation and probably more than likely drove inflation up in the US. When you have ports of call where bazillions of dollars run through that port of call every year, and you have an interruption like an ice storm, or I mean, Texas seen mass amounts of bad weather this year, everything else, and you compile all that in with inflation, your supply chain drives inflation, and inflation is a number that we all see, and everyone seems to forget, including the feds on the back end, that supply chain drives everything within the market.
Yep. Now think about it, okay? There's a couple of definitions of inflation. Inflation used to be defined as an expansion of the money supply. So people look at the M2 and they're like, "Yep, there's inflation." That's not a good way to measure inflation. Okay, so here's a more accurate definition of inflation. And you get inflation when there is more money chasing after the same amount of goods. Do we have that today? We don't. We have less money, if anything. Okay, record high unemployment, right? Less money. Okay, we have some government programs, unemployment, pandemic unemployment assistance. We have, forbearance programs. This is leverage, right? This is stuff that needs to be paid back. The government stuff, that's going to be paid back over time with taxes. If you took out mortgage forbearance, you're going to have to pay that back when forbearance ends. If you have like some sort of rent abatement agreement, you're going to have to pay that back. So the stock market right now is leveraged up to the tits. Okay, and so that's one possible reason why there might be a correction or a crash coming, is when we deleverage, then it will have to correct down, right? So that's a possibility.
Let's not forget that there's a big geopolitical issue going around, and a lot of big powerhouses are trying to cold shoulder each other with a little bit of a squeeze on the ports and a little bit of a shutdown on this and all that, right? You want to make money, listen, in politics there's this saying, always take advantage of worst situation, and this was the worst situation of decade. You really think people are not going to make money out of it?
Absolutely not. They're going to take every advantage they can. So, you have to consider these things. Inflation.
Well,
why is no one in the U.S. political system, good, bad, Democrat, Republican, whoever we're talking about, and the U.S. runs the economy? I'm a Canadian, so I follow U.S. politics quite a bit too. But why is no one talking about supply chain? We hear inflation, job rates, unemployment, blah, 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 blah. Why is no one talking about the disruption of supply chain?
Marcus, it's a highly political issue, and once you pull out these things, you're gonna have to name some countries that you don't want to be naming, because that's gonna cause further issues. So people are trying to, cool it out, but you and I both know that there's no cooling here. It's either money or no goods.
We're from a country where a guy that runs our country that has a clown face talks about drink box runny drink box thingy things.
Oh gosh. I would also want to point out that, when with the higher costs too, I have no idea about your prime minister. I can't talk on that one. I'm sorry. But no,
I respect that, and I respect that you shouldn't talk about him, because we don't talk about him.
Yeah, no, I'm just not even going to touch on that one. Anyway, I also want to point out the the other thing that causes these higher prices is the gas prices. So Biden shut down one of our pipelines, one of our crucial gas pipelines, and
can I touch on that?
Hold on.
Can I touch on that?
In 2 seconds. And then I guys, this is where all of this misinformation, because I'm getting so many different reports about this. So, everyone knows I live down in Florida. So in our pipeline down here, the one that either got hacked or cyber attacked or the military was taking gas, I have no idea what happened with this damn pipeline at this point. But we also have, oh my God. So if you guys haven't, I'm hoping if people took my warning on this and read the infrastructure bill. Can I have hundreds? If anybody actually read the damn infrastructure bill, all 2,700 pages of it.
Hell no, that's way too much.
Hell no. Okay, so
well, about 6 pages of it.
Okay. So on page, I believe it was 1,001 something. Could be in the 2000s. There was a few goofy things in there. They are trying to pass on a federal level, a mileage tax where you will not, you already have to pay tax, you have your gas tax, right? But you will also have a mileage tax. So however much you drive will now be taxed. Like, so the cars, your GPS systems and everything that are in these cars, that, you know, these new cars that will be made, will have systems in place that will have like breathalyzers and, you know, there's something about, you have an app that connects your car or something to see how angry you are or something. That part's not in the infrastructure exactly, but you have to actually dive into the wordings of this because we all know they don't put exact wordings. But they want to prevent road rage and charge us by the mile of how much we drive. And I'm like, you already tax the hell out of us on gas in California. I'm sorry, hell no on your guys' prices. There were days when California had higher gas prices than when I lived in Hawaii. Okay, like take that for a second. Like, Hawaii is an island. You have to import everything from to Hawaii, and you have the fact that I was paying less in gas there than you guys do in California. That's screwed up on a lot of levels. I know there's like some, like, you guys, I think it's like 4 to 5 different types with different mixture. My husband tried to explain it to me and I got lost with the fact that there's different blends of gas in California due to whatever regulations. But keep that in mind. Like, the infrastructure bill, and this is where you guys need to read. Knowledge is power, right? There are things in the infrastructure bill that don't pertain to infrastructure. Okay, it's so messed up. Why are we surprised? Because, you know, we had stimulus bills passed with things that had nothing to do with stimulus. So keep that in mind. These are things that are going to raise the cost of even more things, because guess what? If you have to pay per mile how much you're driving, and this is for semis, this is for regular cars, this is for any automobile, right? And it's all on a different set rate or whatever. But then you also have the raising gas prices because, well, there's stuff going on in the Middle East, like always. The Gulf can't handle any more explosions. I lived here when the BP thing happened, so there's that. And so I don't know, guys. That's the biggest cost. Marcus, go with your thing.
Yeah. So I live in a province in Canada right above Montana. We're an oil rich province. We're deemed number 4 in the world. We create oil out of oil sands. When Biden came into power, he shut down one of the largest pipeline systems coming out of Canada. We like to call it dirty oil. You know, we drill a lot of oil out of the ground too, that came down. And one of the hypocrisies of the whole thing is he shut down one of the largest pipelines that was, I mean, our government spent $5.4 billion making sure this pipeline was going through. When it was going to come down and through, and I believe it went into Wisconsin, Washington State, somewhere else, your guys' gas would have almost been free. Biden shut down that pipeline. Not to be political, I have no political affiliation, no concern about anything. They shut down that pipeline, which was going to bring tons of oil. Like I said, we're probably number 4 producer, I think it is, in the world from the Alberta tar sands. And now he has stepped up and said, well, how come the OPEC countries like Russia and everybody else isn't producing oil? Why shut down a pipeline with your neighbor to step up and ask the rest of the world in the oil world for more oil? Right now in Canada, you guys aren't in the metric system. We're at $1.36 a liter in the 4th largest oil depository in the world. So I can do some math for you, times it by 4. So when I hear people from the U.S. talk about, our gas is at $2.75 a gallon. We're at just under $6 a gallon as a 4th largest producer. Why did we stop that as 2 friendly neighbors?
That is asinine. Like, I cannot believe, like, so I used to go to Canada. My ex lived in
With
Toronto.
all due respect, this is a highly political issue. I could go on
It
and
is.
on about it, but I cannot speak much about politics because of my job. But yeah, you know what I mean.
Yeah, no, and that's, I mean, but this is what we need to be talking about. Like, and this is where we're getting into the broad market aspect of the podcast too. So, but this is why BullHouse exists. We talk the hard subjects. We get into the nitty gritty so we understand, because we were taught not to talk about religion, finances, politics, all these things. So, if you stay quiet, you're not supposed to get in the stock market. You're not supposed to talk about it because it's a scary thing, right? Well, we got to talk about it now. Like, I mean, this is going to affect a lot of livelihoods. It's going to affect a lot of people, because look at what happened with 2008, 2006, the freaking 80s, 70s, all these different recessions. Nobody was talking about finances. I think about my grandmother, my great grandparents. They didn't talk about finances. They went through the Great Depression, right? If we start talking all these different countries, all these, we have the ability to talk to people all around the world and check in and say, hey, how's your country doing? This is what I see on the news. We can't trust the news anymore, guys. We know that. So, the fact that we have Marcus in here from Canada, and I have people over in Germany, I have people that I talk to in Australia, like, I check in and say, hey, how are you guys doing? Because this is what I see. And there's sometimes when they're like, yeah, they're over reporting, or they haven't even mentioned this shit. Like, and
Germany. I have friends in Germany, and Germany is at $6.49 a liter. So times that by 4.
Good Lord, no, thank you. Like, and that's what I'm saying. Like, I was in Canada years ago, over a decade ago, and it was like $4 a gallon, $3 a gallon. Like, it was way higher than what it was here, and I'm like, or not a gallon, a liter. Sorry, again, stupid American over here doing non-metric.
All good. Metric's dumb.
I
The
like
imperial
metric.
system. Oh, I do too. I do, but my brain doesn't go there immediately. And it should, given that I worked in medicine for years. But anyway, so $3 to $4 a liter, and I was baffled. I was like, why are you guys paying so much? And my ex and his family was like, well, that's just what we pay. And I'm like, okay, that's retarded. And that was it. Like, I was 18. I was stupid. I was a stupid kid. I just started watching the markets and getting into all of this. So, I didn't know better. And that's kind of what sparked it. I started looking at global politics and how the world worked because, well, I wanted to understand. And, that was also during 08. That was 10. That's when I started, guys. And so that's why we do this. That's why BullHouse exists, is to talk about these hard topics, because we're adults. We're adults. We live in.
Yeah, and on the and like you said, we were talking about gaming in the broader market. The broader market is that North America isn't getting along with each other, which is a absolutely crazy thing. The next thing we know, now we're looking at Venezuela, and now we're looking at who else has some gas. The day that North America as a broader market steps up and steps together will be a way greater play on the world. We've missed that play. We've missed that play politically. We've missed that play financially. We've missed that play. If we could just on the broader market step up and go North America, not the U.S., not Canada,
Yeah,
Like,
it's.
well,
Go
what
ahead,
I would say,
Antimatter.
thanks. What I would say is more along the lines of I think our interests are not aligned, and arguably are misaligned in uh, to the greatest extent that they have been in recent history. It's hard from my perspective. It's hard to point at one specific thing and say, well, why are these prices so drastically different, or why have they increased, without pointing to everything else that's going on in the world and likely contributing to those specific price increases. As we consider the broader market, all of these things are intertwined. prices go up for one commodity because of XYZ, A, B, C, D, E, F, G, that's going on in the rest of the world. It's not, unfortunately, not as simple as just looking at one specific thing and, hey, why are the prices so much higher now? It's all of these things that are intertwined. And yeah, I think, just our interests, unfortunately, are drastically misaligned right now. But I think there's certainly opportunities, especially when we consider our neighbors, bordering neighbors. To consider broad at a broader level. Should these interests really be more aligned, closer together?
Yeah, we fought with the U.S. I think it was about 3 years ago over soft lumber prices, and it was the most ridiculous thing in the broad market in politics you could ever see, and
I believe it.
and I believe it probably spiraled into the effect of the last lumber thing too that we just seen, was because North America needs to get along before we get along with the rest of the world.
I can agree with that. I mean, well, I I have a few things. So this is probably my naiveness. This also could be my optimism here, but I don't know how you can be connected by border. I know Europe. I know Asia. I know all of you guys are connected, but you have Canada. Who the hell who picks a fight with Canada? I mean, come on. Who does that? Who sits there and says,
Hey,
yeah?
we'll come and burn your White House down again. Don't kid yourself.
Don't do that, please. And I would please don't say that on the podcast. I don't want to get canceled by YouTube. But no, like it's it just baffles me, and this is where I look forward to new blood, new people running different countries, younger people, our generation finally getting a chance because we're having these conversations, right? Like our people our age are having these conversations and, saying, what the fuck? Like, why are we fighting? What is there to fight? There's bigger and worse things to fight about than lumber, okay, gas. Like these things, hey, you have this, I have this, let's make a trade. How hard is that? I mean, it is baffling that we live in a world still that power hungry people. And I don't understand what we're fighting over power for at this point. Like we have an interconnected world. We are connected by internet, like exactly what I was saying earlier. We talk to people in all countries. We are a very small world at this point because we have the internet. The internet made the world small. And I look at my follower. I have 4,000 someone follower. Conway has almost 2,000. There's other people in here that have like 5,000. All these people are from around the world. We're getting messages around the world. And so at this point you have to go, why are we still like this? We have the ability to grow and learn and figure things out to an extent that every country has its purpose at this point. Every country does its own thing, and and this is actually kind of part of this is where I'm really kind of irritated with the states, because so part of my DD that I'm working on, guys, is the comparison of the United States. I can't say America, and for people that say, hey, America is fucked, well, you gotta kind of specify where, because we have South America, Central America, United States of America, Canada, it's kind of all America. So you guys kind of start specifying. But the comparison between the United States and Rome, okay? And if you don't, the biggest thing that my husband and I were talking about was, what was the biggest export of Rome in its heyday? Does anybody know? No? Okay. So the biggest export was entertainment. Their fights. everything like that. That was what they sold. Everyone came to see the Roman cathedrals and everything like that. The warriors. What is America's major export now?
Teslas.
I'm gonna smack you, Conway.
Well, I'm serious. I'm serious. Like, look,
But it's entertainment.
Or not? Yeah, it is. But whether you like Tesla or not, it is legitimately one thing that America produces that the rest of the world legitimately wants.
Right. Okay, that's fair. But entertainment, our music, our lifestyle, like I didn't believe this until I actually saw it. I think it was in Germany. It could have been in Italy. But somebody posted a picture on Instagram of a package that said the American lifestyle. This was like a party bundle thing, and it had red Solo cups and beer pong and like all this other crazy shit. And I'm like, they sold our lifestyle. They literally sold what we do at college. Like, this is what we do at college, guys. For those that don't know, beer pong, cornhole, whatever. That is American as you get, almost, sadly. So a bunch of drunk tailgating people. That's really sad. But that is our biggest export, is entertainment. And if you look at how, and this is part of my DD, is how the Roman Empire ran, how it collapsed itself, the fighting with the inward fighting within the country. It is absolutely crazy, the parallels between Rome and the United States, just what we're seeing. And I started looking into this, and then I found articles that were written like a few years ago that were like, is the United States the new Rome? And I'm like, but I found this really funny thing is that I don't remember which article it was. I have it saved, but it said the United States is not vigilant enough to be the new Rome. We're not basically they say that we're not militarized enough. And I'm like, have you met our military? But that was the other big thing with Rome, is that they spent a vast majority on their military. That was like they would take money from their constituents, their people, their population, and put it into the military. They take it out of production and supply to build their military. And I'm like, hey guys, we got to look into this. So if history rhymes or repeats, that's why I'm looking into this, because I'm like, okay, if this is a thing, we got to see what happened and how they did this and what happens, right? Because it's just something interesting. So that's my DD. That's my soft release of it. It should be done within the week because it's fascinating. But
that's some great DD to look back in history and see where the downfalls were, and us as a public collective now of people, whether you're a retail investor, whether you're a person, whether you're whoever you are. I think we've come to the time where change is going to happen, and change is going to happen because people have had enough. Places like Rome were overthrown because people had had enough. Look all around the world right now, things that are being overthrown, or let's not touch on Afghanistan. Let's not touch on anything. I believe that people now are starting to aggressively find power as a collective to make sure the world becomes a better place.
I mean, we can touch on Afghanistan. That's actually a very big political thing, big geopolitical thing that's going on. Like, fucked up. Go ahead.
Before we get, this is where Michael Burry would be right about his bet against U.S. Treasuries. Is if America collapses and we lose world reserve currency status, and nobody wants U.S. debt anymore, and nobody wants U.S. bonds, Treasury bonds anymore, that is where the dollar collapses. That is where U.S. Treasuries collapse. That is when Michael Burry is correct in his bet. But until that happens, and this is
winner, chicken dinner.
Yeah, this is a real threat. So it's not something to be brushed off or taken lightly. But until that happens, you just don't fight the Fed. You just don't. Buying unlimited numbers of U.S. Treasuries.
That's why I asked you if we figured out our debt ceiling and who's going to buy our debts, right? Like we got to figure that
Right.
out. And
So
that
I
timeline's coming up pretty quick. I mean, they were supposed to do it July 31st, but I think, what is it, September, October, I think, is when when the Treasury actually runs out of the ability to pay our debts. Is that it?
yeah. So sort of. It's issuing additional debt so that the government has money to spend. And look, don't listen to me about this because I'm an idiot, but I kind of
You're
think
not an idiot.
not having the debt ceiling raised short term is a good thing. So hear me out, right? And put additional layers of tinfoil on as I go on, tinfoil hats on. But it's bond bullish. It creates more because look, everybody has been watching the reverse repo numbers go up and up and up, right? We've been like 3 or 4 days in a row over $1 trillion. What does that mean? That's bond bullish, right? Because as demand for the overnight reverse repo facility increases, the Fed needs more collateral to give to the banks for the overnight reverse repo. So what does that mean? They have to go out into the market and buy more bonds. The banks have to buy more bonds to flip it to the Fed. This is bond bullish.
Conway, can you? There's probably a few people in here that probably don't understand what the reverse repo is about.
Okay,
can you just
sure.
if you're going to talk about the reverse repo, can you dumb it let's do that
Sure.
book, that short page book or whatever of reverse repo for dummies?
Broadly speaking, if you're a bank and people deposit money into your bank, you got to give them a little bit of interest, right? So people depositing cash in their account, that's not good for you as a bank because you're losing money, right? You're bleeding a little bit of money. Interest is very, very low, but you are still bleeding. So how do you fix that? Well, you either need to make so much more money that you can offset that, or what you can do is you can get rid of your cash overnight, right? By using the overnight reverse repo facility, and then you don't have to pay that much interest. Okay, so that's why you see overnight reverse repo skyrocketing. It's because there's too much cash in the system. Okay, why is there too much cash in the system? We talked about leverage before. That's certainly one aspect, right? Mortgage forbearance, people haven't been paying their mortgages. But there just doesn't seem to be anything that people want to spend money on, right? Stocks, if you think they're overvalued, you're not going to go buy stocks right now. You're going to get burned, right? At least that's what you would think if you were in that position. People still have COVID fears, so you're not traveling as much. People are still working from home, so you're not going out there and spending a ton of money on gas commuting every day. You don't necessarily need a vehicle, so you're not spending money on that. So there's too much customer deposits within the banking system. That could be ordinary people or institutional money as well. Okay, but regardless, there's just too much cash in the system right now, and that's why you see the RRP so high every single day.
It's my grandfather. I just talked to him the other day. He explained it in one of the greatest ways you could ever. People are putting their money under their mattress again.
Pretty much, yeah, pretty much. Yeah, so that's why you see.
Or Amazon.
Right. So either way, you are seeing this increase in reverse repo because it's an indication that something is broken in the system. Typically, it's not the place to look for what is broken. It's just a symptom, right? And the thing is that just people aren't spending money; they're saving it up. If anything, they're destroying money, right? Because we live in a debt-based Keynesian society, which means that debt is wealth, which is another wild concept to wrap your head around. But if you're in debt and you're paying that off, you're destroying money within the financial system, it goes back to the thing we were talking about printing money. The Fed doesn't print money. The commercial banks print money, but they only quote unquote print money when lending happens. And lending has been severely disrupted. You can go onto the Federal Reserve website and look up graphs of this, right? All commercial loans and leases down, are all loans and leases and credit from commercial banks. It's all down. So they're not lending. And if anything, people are paying off debt, and that destroys money within the system. So that's a major problem for the way our society works currently. Debating about whether this is a good system or not is a completely different matter and beyond the scope of this conversation right now. But that's the reality of what's going on.
Oh, Conway, Kiana put something up on top. Can you look at it and tell me what you think?
Sure, give me a sec.
Actually, tell all of us what you think.
So while Conway's looking at that, so yeah, we can. So I do want to touch on some of the global news, okay? And this is where I encourage the entire community. You have to keep your eyes open. Start talking, reaching out, and that's kind of my fun thing with the tweet about Guam, asking how they're doing. And I actually got some really good information about all of that I'm going to put out here soon. And because Guam's not doing very well, come to find out, like they're worse off than how Hawaii's doing. And what's unfortunate is they're a territory, they're not a state, so they don't have the same funding opportunities as a state would. So like Puerto Rico and Guam, we're basically like, hey guys, sorry, you're on your own, which is unfortunate. And so, my heart kind of goes out to you guys for that. If anyone that lives there or is stationed there or anything, and those two places, just stay active, stay knowledgeable. But we also need to, look at the world, talk to people from all different countries. Why I say this is, with like Australia, there's trade wars. There's China and Australia are kind of going crazy with each other, and you don't hear about it. You don't hear about it in our part of the world too much. But China basically had stopped their ships from. They did just kind of docked them out in the middle of the ocean with Australia, and there's different things going on, and Australia's getting hurt, and that's really sad to see. I have a whole post on it that I'll put out here soon with that whole mess. I don't want to get into it too much unless somebody else wants to talk about it, but and Australia's getting locked back down and all this other stuff. So there's we got to send our prayers out to Australia. They're in a mess. And then we have the stuff going on in Syria and Taiwan and Thailand and Afghanistan, and I mean, guys, the world is a freaking mess. Yeah, I'm sorry, guys, on Twitter. Whenever I tend to share things, for some reason, then the words stop popping up. I'm not exactly sure. But anyway, the world is a complete mess in that sense of the matter, because it's just, we have to take all of that into consideration. Your wife's in Guam. I'm sorry. And the audio's crashing, guys?
I hear you just fine.
Okay, YouTube's saying the audio's crashing hard. So let me know if it's...
I can hear you just fine.
Okay, well, I mean, so yeah, if I'll check on those. They should let me know here soon. But we have to kind of know what's going on with the world, because we do have imports from all over the world, and their imports and everything affect us, because it's all supply and demand and what we get, and different products use different materials from all around the world. It's getting, when I say everything's intertwined and everything kind of goes together, it's a mess. And the things with going on in Afghanistan, the refugees coming out of Afghanistan, they have to go somewhere, and I am so frustrated with how that all went down and the response, and
I generally think that we're at a point in time where things will hit a peak, hit an episode, but I also believe that there's enough people now that are seeking the truth, that are seeking world knowledge and want to understand everything. And I think platforms like this, podcasts, Twitter, great that Twitter made spaces. It's another place that people can reach out. And I think people are going to become more educated, and we need to not drive fear into people. We need to drive education. Whether you want to be a smooth brain, a wrinkle brain, a whatever brain, I think that it's time now that people stand up and spread information. You're always going to see bad information. You're going to see FUD. You're going to see the whole works of the whole things. But I believe as a society, as people, now worldwide, with as many platforms as we have, especially because of the internet, I believe that people are becoming more educated. Reach out to people if you're having a bad, especially, you know, I'm 50 years old. Back in my day when I was having a bad day, my dad told me rub some fucking dirt on it and get back in the game. I believe now we're becoming a society where information is so readily available, and if you can find people that, you know, aren't I don't know what you want to call it, a click, whatever, whether it be Twitter, whether it be Discord, whether it be wherever, find some information and inform yourself. Inform yourself financially, inform yourself in every way you can, to listen to people, interject with people. Don't, you know, I used to have a fear of speaking, even though I'm in like a profile job where I have to speak all the time to people, give people shit, do all those things. Step up to the plate if you don't know something and ask somebody about what they know, and then go with that in life. Listen to someone else's objectives on that thing and learn more. Push yourself in life to learn more.
That's exactly it, Marcus. I mean, it's been my philosophy since I was probably 14 or 15, is that you have to learn something every day. It doesn't matter if it's a definition of a word, if it's a new ideology or anything like that, a new religion. You have to learn something every day or you've wasted your day. And I kid you not, like I would get to a day where I just probably gamed all day or something, something goofy. And I'd get in bed and I'd say, crap, I didn't learn anything today. I would pull out the damn dictionary. Smartphones weren't a thing yet, which is really funny to think about. And so I'd pull out the dictionary, a thesaurus, a encyclopedia or something. I would watch the news or something. I would try to learn something that day, something, anything, and say, okay, I've learned something. And I'm an English major, so words are kind of my thing. So I encourage that. You have to learn something every day, because we're in a weird time frame. But guys, the people that are younger than me, you live in an awesome time. I remember being a child and they said the internet will be the information highway, right? The information highway. I don't think they actually anticipated people using it the way we use it, to talk and actually gain information, accurate information, or, whatever. But you can do it. And there's people all over our community that are just a wealth of information. You have Conway, you have King Diamond Hands, you have Marcus up, he has life experience that I'm sure I could pick his brain on. It doesn't matter if you're learning about
it would make your brain hurt.
No, probably not. I've lived a little bit too much for my age at this point. But I would definitely still pick your brain, because Canadian at 50. What was it like? And I need you guys to do that, because and I cannot emphasize this much. I'm probably gonna put this in my bio. Communication is the first step to understanding. It's the first step. It's not the second or the last. It's the first step to understanding. And then once we understand, we can really start fixing things, right?
Yeah, I'm a firm believer in reaching out. So in my 50 years of life, I've been through a ton of stuff, good, bad, otherwise in between, grew up in a crazy family with a police officer, did everything. Reach out when you need to reach out, whether it's why did I buy AMC? Why did I buy Game? What's going on in the world? Supply chain. Reach out. I think I've found probably, I never used Twitter a lot before, and I've found in probably the last, I'd say 6 months, I've found a lot of people I've connected with that I could reach out to, and I'm having a bad day. This hasn't happened in the stock market, Afghanistan, the military, the politics, everything else. Don't ever hesitate. If you hear someone speak or you trust someone, reach out to them. The knowledge, the I'm having a bad day, I need to recenter myself. Never be afraid to reach out to someone.
Definitely not. Like, and then that's, and that's where I want to thank everyone that really kind of picked me up today. Like, I mean, the outpour of just support. Like, I kid you not, yesterday I was I was feeling a little defeated yesterday, and it was hard. Like, it was very hard to read some of these DMs, and I'm not one to share DMs. I don't share private messages out into the Twitter world, because once it's on the internet, you can't take it back, right? Like, you just can't. And so the people that did it, I said what they said, and they have to live with that. And but I cannot thank you guys enough today. Like, I woke up to, after I posted that, like, just amazing messages. And I was in tears yesterday for one thing, and I was in tears for a different thing today, because I was, I have my own stuff going on. But I'm a bubbly person. I have many numerous things in my life that are going on that are terrible, that most people couldn't fathom. And yeah, every day I wake up and I'm like, you know what? I'm awake, I'm alive, I'm here, let's fight. Right? Like, that is my fight right now. And I've looked the Grim Reaper in the face twice in my life, and I said, "Fuck you! I'm here for a reason," and here I am. I'm a fighter, and so, do not hesitate to reach out to some. If you see something, like, I'm still trying to reach out to Citadel Air. I have no idea where the hell he is. He's like vanished. And I'm like
Yeah, what
calling
happened to
him.
that guy?
I don't know. Like, I've been reaching out like 3-4 days, guys. Like, I'm one of my own staff members, and I'm like calling him and everything. And I'm like, where are you, buddy? Like, are you okay? Do I need to, send the police for a health check? Like, so I'm after this whole call, I'm going to be calling him going, are you okay? Hello, you need to call me back, because, we talk all day, guys. Like, we text back and forth. We, talk on Discord, whatever. And I'm not hearing from him. So, this is kind of the interesting thing with our community. Like, right, we get used to talking to people, and then they kind of just go MIA, and you're like, okay, is this person okay? Did they, what happened? And you just never know either. Like, someone could be having a rough day. And another personal experience, like, I had an appointment that, kind of went differently than I thought it would. And so I don't put all my medical stuff out, guys, because I don't want to worry anybody, and I'm okay. I will be fine. But I had a rough day, and someone reached out, and they just said, you know what, I appreciate everything you did. And just out of nowhere, I appreciate what you do, and thanks for being here, and blah blah blah. You really encouraged me to, look into stuff and whatnot. And that was all I needed that day. It picked me up to say, okay, what I'm doing matters, and it's definitely worth it. So you just never know, if you just a kind message. And that's what I tell everybody, is just be kind to one another, because you don't know what someone else is going through. You don't know if somebody just lost a parent. You don't know if somebody just had to put their dog down. You don't know if someone just got some really weird news. Someone just got broken up with, whatever, you don't know. And so that's where we have to be kind to one another, and, embrace our cultural differences, because that's how we learn. That's how we break up the the bullshit, right? Like that was the best thing I loved about all of this community, is that it didn't matter what you looked like, where you lived, who you liked, who you whatever. It doesn't matter. It doesn't matter. You guys don't, I mean, you guys kind of know what I look like in a sense, but you don't. Like, there's still some mystery. I know I got some flack. Some people were like, oh, the mystery's gone. You couldn't pick me off of a sidewalk. I promise you. You couldn't pick me out of a crowd. And so I love that. And I think
be kind. Be kind.
Kind of to piggyback off of that, in a different perspective, I think when we have these kinds of conversations, when we are conversing with these communities, we also do need to recognize that there is a need to have at least a little bit of thick skin. We don't know who's on the other end of, whether it's a computer, a phone, who's on the other end of the communication. There might be bad actors out there that are intentionally trying to whether rattle some cages, rustle some feathers. We don't know what their intentions are. And as we continue to have these beneficial conversations, these great dialogues, I can only expect that there's going to be an increased interest. We're probably going to, the group will probably have more people listening in, and expanding the dialogue. We don't know their intentions. So assume positive intent is the mantra I try holding, but we also just need to be I think just try to not let that really break you down, and maybe take what would otherwise have been a good day and make it a bad day. Yeah, I've seen in these communities a lot of I'd say there's some very
You
vocal.
mean people calling me Shill every single day
Yeah,
because I
yeah,
try to tell them
exactly.
a lot of stuff?
Because
It's
you're not
okay.
feeding into my confirmation bias. You
I
must
mean,
be.
you guys can call me a shill every day. When you
No,
say
you can.
yeah,
I mean,
I
I get
know.
called every
No,
day.
thick skin, 100% of the day. Like but when I have someone telling me, I hope your husband cheats on you on a daily basis, and I hope you die and your medical problems never get solved, man, fuck off. Like, I'm sorry,
Oh,
I know.
wholeheartedly agree.
Like
Yes.
that, I am all about thick skin, and I have challenged some of the biggest people in this community at this point, because I think what some things are said are asinine, but that no. And if anybody, and guys, this goes out for my entire community, if anybody is being told that, please let me know, and we will call it out, and I will support you 100%.
100%. I'm behind that too. If there's anybody that's in the community, any of these communities, whether I don't care what you're on Twitter for, reach out. I will call out anybody, because there is not anybody above you, me, the other person. I don't care if you're trying to gain popularity, if you're trying to make money, if you're whatever else. I'm on Twitter. Wasn't on Twitter hardly ever before. I was on Twitter a few times, and you can see, because I'm a huge influencer I keep putting my ticker up. I'm at I think 175 followers now. If you ever have an issue with somebody on Twitter, send me a DM. I will step in, and they will not like who I become.
And can I, wholeheartedly agree. There's certain things that should not be tolerated. I was more so talking to specifically, some people's feelings towards specific securities, towards specific investments, and yeah, just calling others a shill. I feel there's a lot of emotions being put into specific trades, etc. People's positions in that case, and um, yeah, I think in that particular instance, it is more so what I was getting at, that there's very vocal voices that are trying, I think, to divide the communities, and that's where I was more so speaking to the thick skin, but certainly
yeah.
other or should not be tolerated, and that's unacceptable.
No, and division, I'm sorry, guys. I'm done with it, and this is why I have to step back from covering only AMC or only GameStop because it's not me, guys. I can't play the game. I'm not one to play games. I'm here because there's a whole shit ton of information that needs to be covered, and we have minuscule time. And when I say minuscule, I'm not saying like days or weeks or anything. Like it could be like a year, but that in the grand scheme of things, if you have a year to figure out financial stuff, and I'm sure Conway and Antimatter and anyone else will agree, a year is not a big time to plan for something that could happen, that could, where you have to have, your housing secured or your bills secured or finances, whatever secured to where your family can survive, right? Because, like, I know there's some people, like Conway said, like, he doesn't see a collapse coming, EA doesn't see a collapse coming, whereas I see,
Oh, I didn't say that.
Okay, it might not be.
You did, and I said that. I
Okay,
don't see a collapse
EA said
coming.
it. EA said he doesn't see a collapse coming, but it's like with the historical trends, the fourth turn, everything I've been looking at since freaking Julius Caesar at this point, like it happens. 2020, the 2020s to the 2030s, somewhere in this realm. I'm trying to pinpoint it down for you guys, but the government's kind of goofy and they like to kick the can. So, and they can for some stupid reason. But I have this feeling, and because if you look back through history rhymes because it goes with human life cycles, right? Because for some reason, these history books, these really awesome things that exist where it actually tells you what happened pre you ever existing. They're there, and apparently no one reads them, and nobody goes through historical documents to see what other generations did and how they fucked up and how they fixed it. Instead, we just let it happen again and again and again. And so I need people to hear that because it might not be a full collapse, but right now what I see is an infinite bubble. It's a bubble. There's all the market bubbles are in one big bubble, and I'm just waiting for one to pop so I can start pinpointing which one's going to come next, right? Because I mean, heck, I'm watching Canada, I'm watching Europe, I'm watching all of these different markets, and so like EA, you posting this thing with the wild divergence with the Asian and global stock market, like those divergences. There's historical reference. If we go through the historical charts, we can see and pinpoint when these things happen, what happens afterwards, right? Like I've showed you guys this with the Dow, the NASDAQ, the S&P, whenever there's a divergence. And the fact that some of these finance magazines and news places are just now reporting on this. Guys, I posted that DD, my history repeats itself 3 months ago. 3 months ago, I was like, hey, there's this really odd divergence that through historical reference, when these two diverge, we go down. Like this is a common thing that they found. It's an indicator of a bearish market. And so it's just kind of funny it's that weird confirmation bias when you're like, haha, I was right. But if we look at all of these bubbles, all these markets, all of the different nations' bubbles and markets, and guys, it's a ticking time bomb. Because if you think about, Conway said, mentioned this, the U.S. being the reserve currency of the world, which is the dumbest thing ever. I'm sorry, but it is literally the dumbest thing ever because it's only backed by faith. And so whatever we think, what? Go ahead.
I don't necessarily agree, but continue.
Okay, I want to hear you. I mean, but a faith-backed currency, right? It's whatever you think it, whatever. So when it was on the gold standard, cool. I would have totally supported that. But when the U.S. dollar, if the U.S. dollar goes down, and this ties into the stock market, if they were to control the MOAS or anything like that, if the government stepped in and said, sorry, you can't make this money, in my opinion, that would limit the idea of what people think of our stock market. You know, it's no longer a free market, and we know it's not, but international investors, any of my international people, I'm sure you guys would say, screw the US market. I'm going to pull out, I'm going to go to the Asian market or the German market or wherever, because, well, I kind of know what I'm going to get into there. Maybe, hopefully, if they're not as corrupt as the US one. And so, you know, that's, this is my opinion, all of my opinion, just based off stuff that I've read.
Not
But
financial advice.
yeah, not financial advice, none of the other whatevers we have to say. But in that theory is if you have everybody pulling out of our market, goes down our economy, that goes down the dollar, and then you have other countries kind of suffering because, well, all the other currencies and markets would go down too, until everyone kind of put their money in other markets, and then the U.S. is kind of effed in the A. So why I'm saying that is, with U.S. being the reserve currency, like, we have to watch all the other markets because it does affect it. And if we have one of our bubbles pop, that affects our economy, that affects our dollar, that affects the world. Because if you remember 06, 8, 10, 12, 16, you know, I feel like we go through, you know, my adulthood's just kind of been shitty at this point. But anyway, so if you just kind of look at those, anytime our markets go down, the world hurts. The world hurts for it. And eventually the world's going to say, bye, America, you're unstable. And someone else is going to become the dominant power, whether it's the euro, whether it's the yen, or whatever. And then that's a really weird change in the world. Now, Conway, I would love to hear your point on that.
All right. I kind of want to go to EA's question because we've been talking for a while and I haven't addressed it yet. But
oh, for sure.
Real quick about reserve currency. Look, the idea of reserve currency kind of came from like back in the day when they had trade routes, whatever. If you were a merchant, you needed to hire people to make sure that you could conduct business. And that's kind of the similar purpose of what America kind of does today, right? I mean, it's not an accident that we're all about military and defense spending and all this other stuff, right? We're kind of the world, we're the world reserve currency because we have the guns to back it up in a way, right? This is a concept that I learned from this really smart guy on Twitter. His name is Travis Kimmel. His handle is Colorado Travis. One of the smartest guys on Twitter. If you're not following him, I highly suggest following him. Another person is Stephen Van Meter. I learned a lot from those two guys. Travis has this interesting concept about how the world reserve currency status in America can be preserved, and it has to do with space. That seems to be the next frontier, and the world seems to be moving towards there. And this goes back to space weaponry. This is a wild concept. But yeah, that's why I think America's status as world reserve currency will be okay. It's because of weapons, but also because it's just what the world is used to, right? And habits are hard to break. So something drastic needs to happen for world reserve currency to be lost. That being said, it's a real threat. People are talking about it. The World Economic Forum and the International Monetary Foundation, they're both talking about a new Bretton Woods. Bretton Woods was the agreement after World War II that established America as the world reserve currency in the first place. So a new Bretton Woods would be a new reserve currency, and that would be the central bank of the world, maybe Europe. A lot of people think China, but China's not in the position to be the world reserve currency, partially because of people not trusting China and Chinese currency, but also because they are the world's manufacturers. They're not the world's importers. America is the world's importer, right? So it gets complicated, but if you wanted to learn more, follow those two. Divergences, to get to EA's question from earlier. Yeah, I mean, you can see divergences all over the place in our markets right now. It's not necessarily going to be a cause. It can be, but not necessarily. It's more like a suggestion of saying, hey, American markets, you're way too high. you need to come down here. And, you know, you kind of have to take a broad look at everything to kind of see where things are going, right? So yeah, Asia has been crashing. The Hang Seng, which is the tech index, it's reached an all-time low today, I think. Like, it's been doing really bad. Europe, not doing so great. Australia, as you said, not doing so great. All these things not doing so great. Beyond that, even in America, you can look at other indices, right? So you can look at the IWM, which, look, it's the Russell 2000. It's 2000 kind of shitty companies. People consider it a trash index, but it is potentially a leading indicator. A lot of people look to it as a leading indicator, and it's been trading sideways, unsure of what to do. So weakness in the IWM suggests there may be weakness to follow in the major indices and the broader indices. You can look at transportation. You could look at semiconductors as a proxy for the tech sector for QQQ. There's all these leading indicators, and a lot of them are either sideways or down. And that suggests that the fact that the S&P and the Dow keep going higher and higher, that is a divergence which will need to come down to kind of match with everything else. Add to that COVID fears, potential lockdown fears, political fears, Afghanistan, whatever. Like, these are all factors on the table that you have to consider when looking for a market correction or a crash. Gold is down. Lots of things are down. So that's what I think about divergences. You kind of have to look at divergences everywhere. Oh, the other thing is also technical indicators. Some people don't believe in technicals analysis, and I certainly can see why. But again, I think it's just another puzzle piece on the table that you have to take a look at to consider. And what you see when you look at technical indicators of the broader market of indices is that we have divergences there too. So for example, the S&P and the Dow, although the chart of the price goes higher and higher and higher, the RSI has a negative divergence, the MACD, negative divergence, volume is trending lower. There's all these things that kind of suggest that, hey, maybe we shouldn't be up this high. Maybe we should be a little bit worried about a correction, if not an outright crash coming. So that's a big piece. Another huge piece that I don't see anybody doing except for Stephen Van Meter is looking at the economic calendar. You can Google this, economiccalendarinvesting.com. Okay, this is a huge table of numbers, reports generated from all over the world. It's tricky to use because you have to set parameters. It's not hard. It's just that if you're new to it, you may not know what to do. If you go there, you have to change the settings. Month over month is good. So you look at you change the time frame for the previous month. And then if you scroll down, there's all these different parameters that you can set as well. You can check off whatever parameters you want. And you can see all over the world, we have negative divergences, right? You have factories reporting that it costs more and more to produce stuff, but the amount that they're selling for is less and less. So that's a divergence. That's not good. That's deflationary. You know, you see people taking out less loans. They're getting less credit. That's not good. That's deflationary. You can go down the list anywhere you want, right? Europe, Asia, Australia, United States, whatever. You have divergences all over the place in this, and yet the S&P and the Dow keep making higher and higher highs. So for all these factors, it all strongly suggests that the market may be due for a correction, if not an outright crash. On top of that, you can go to Hedgeopia and look at how hedge funds are positioned, and you can see that although they've covered a lot, they're still net short bonds, particularly the longer end of the curve, the 30-year, okay? That's kind of a crazy story that I've talked about before. We can get into it some other time. I don't feel like talking about it right now, but the point of that is they're short bonds, even though the Fed is doing unlimited quantitative easing. Like currently we're doing what, $120.5 billion of quantitative easing every single month. 80 of that is in bonds. And I forget exactly the number, but a good portion of that is in the 30-year. Recently,
Conway, can
yep,
you dumb down quantitative easing? Because I
sure.
get what you're talking about, but when we use big philosophies or big numbers or big names or whatever, dumb
Sure.
it down a little bit so everybody understands what you're talking about while you're talking about it, if you could.
Okay. So quantitative easing is just it's the Fed paying banks to buy treasuries off of the market. So the bank goes out, spends money on buying treasuries, and sells them back to the Fed. So the Fed effectively is reimbursing the banks for buying these treasuries. Okay, so the banks aren't making money doing this, but for whatever reason, people keep thinking that this is money printing. It's not money printing, it's the opposite. They're taking bonds off of the market and locking it up in the Fed's balance sheet. The effect of it is that
Did Conway crash or did we all crash?
No, I'm still here.
Okay.
I think Conway did.
I was like, oh no.
Look, I'm a simple man, okay? When I see that Americans are going shorting their best companies of almost their whole history, yeah, it tells me one thing and one thing only. go short.
Hey Kev, what's going on?
Well, I wanted to thank you for opening my mic a few times there because I crashed out a few
No
times,
worries.
and I did want to jump in. Something that both you and Conway had said, that idea of being the reserve currency of the world. Yeah, it's super important. And I think when Conway was talking about, well, we have the guns to make that happen, I think that's what evolved over time. Because at the original time of the Bretton Woods, we were the world's producer and we were the world's explorer of new lands and in the not far too distant future of space. And so because of that, and because of, I think at the time, the general sense of the other participants of the Bretton Woods, the United States was where it was happening. A lot of that has changed since. And now I think that where Conway's idea of, we have to have kind of the guns behind it to kind of enforce it, it's maybe because whether the perception or the reality or times have changed. And of course, um, geopolitics. And even if you look at the very sources, the Industrial Revolution happened here. And Kenna was talking earlier about those cycles, lifetime cycles. So between the beginning of the Industrial Revolution and the Bretton Woods conference, you're talking about like an original life cycle. And if you think about that generational type of wealth and how things are handed down upon, we are in kind of that lifetime cycle again, and we should be, really on the lookout for where it's going to happen next.
That's bang on the narrative, Kev. I'm glad that you interjected that whole thing because sometimes we tend to not look at history and history repeating itself, and we need to start to focus, like Kira Kenna was saying earlier. We need to re-look and refocus on what's happened in the past and the cycles of what has happened in the past. And we now need to start looking at the past in order to look to the future.
Oh yeah. And I mean that's the thing, right? Like how do we not? I mean, we have to look to see what was done and how they handled it and how we can handle it in the future or how not to handle it in the future. I mean, it's what we're doing right now, what we've done for 100 years, it doesn't work, right? It hasn't worked. I don't care where you live in the world. Nothing we're doing right now is working, and we need to figure out what they're doing so that we can figure out what not to do. Because you have, you know, I keep emphasizing this. Gen X, millennials, we're coming up. It's almost our turn, right? It's almost us getting ready to start running the show. And we have to know what the hell they did so that we know how to fix it. And if we don't know what they did, then it just kind of goes unnoticed, because a lot of this stuff, a lot of the problems we see are hidden in bills that we have no idea, right? If you're not reading infrastructure bills, if you're not reading stimulus bills, if you're not reading, bill fucking, sorry, 3002. I'm sorry. This gets me heated, and this is I really do try to watch my mouth on the podcast, guys. I really try to. But anyone that knows me can attest that my mouth is not the greatest. I am sorry, but
So what you're saying is literally the more you read, the more you educate yourself, the higher chance you have of making money in this situation, right?
not even making money. It's not even just about making money, guys. So I understand people wanting to make money. I do, 100%. But it's
No, Ken, what I mean is that money is the one of the strongest motivator in life, right?
it is.
So
It
some
is.
people want to make money by
No,
making
no,
rap
money is
music.
the root of all evil. That's what money is. You can have a bazillion dollars in your bank account. It doesn't mean you're happy.
Nope.
I've done really well in life. I've been trading the stock market for 30 years. I used to hate to lose $50. I used to hate to make $50. I should have made $100. We're about to find a time as a collective, as an investment people, as the general public. We need to start focusing around people. We need to start focusing around it's not just about money. It's not just about me making money. It's about everybody following me, you, whoever, however you identify as all of us making money as a general purpose. The whole purpose of the changing the 99% to the 1% or the 2% is now, I believe, as a collective of people waking up, quote unquote. I think that the vested interest in AMC game in changing the stock market. But when I first invested in AMC and game was in December of last year, out of a fluke. My whole narrative now isn't about making money. It's about making sure that everybody else in the world is educated, making sure that everybody else knows that this isn't just about the super rich and the everybody else in the world. This is about the general public being educated and finding a way to become the brand new 99%. We're done. We're done being the 1% or the 99% or however we want to see it. We're done with that. It's time now that the general public comes together and says to the world leaders and says to political figures, the investment figures, the hedge funds, the whoever you want to have your anger against, we need to collectively come together as a group and say, no, enough is enough.
Yeah, and if I may, tying that into what kind of was mentioning earlier, that's actually what makes me super excited about the new generation that's going to that are adolescents right now, like the millennials, Gen X, Y, Z.
We're not adolescent. We're millennials. I'm 31 years old. Damn it! Don't put me back
The
there.
elemental piece.
I'm a little older, not by much, but a little bit. But I think to my nephews, that are just about to start high school. And yeah, we think back to the people that are in power right now, like the Pelosi's that arguably, from what I've been seeing recently, are playing the stock market very well. It's very lucrative for them, but they're I'd say super old, but they have been involved in the market for ages. And I think part of that is it takes time to understand market dynamics. It takes time to understand ultimately how the stock market affects me. And as much as I hate to admit it, I think this is part of where this quote Robin Hood phenomenon plays a drastic role. I'm not the biggest advocate of Robinhood. I was burnt by them in January of this year, but it's hard to deny the impact that Robinhood has had to make investing accessible to the masses, and it's made kids interested in the stock market. Granted, some of that's gamification, but it's helping to educate them. And once you get people interested in how this affects me, they want to learn more about it. And that's what really excites me about the up and coming generation is that now that they know how the stock market affects them, whether it's their retirement account or whether it's just their play money for the weekend, they know that they're starting to connect the dots between how the stock market affects them, how decisions that are made by our elected officials affects them, and ultimately affects their balance that they have. So I think we're at a crossroads right now where technology is finally it's finally matured to a point where it's going.
catching up.
Exactly, it's catching up. It's going to allow us. We're at a crossroads where all these different factors are coming together to finally help level the playing field to at least a little bit for the retail investors. And I'm super excited about the up and coming years. Hopefully, we'll be able to make these markets a little bit more fair for us.
I think that's the narrative that they want you to believe. And that's not what the reality is. Because, Robinhood's entire model is pay for order flow. So they're giving they're giving somebody else the heads up on what your intentions are, and so they're really not democratizing. They're really not making it for the retail player.
Yes.
They're looking for a large transfer of wealth. I took a screenshot I thought was great today. Screenshot off somebody's Twitter or something where it said amazing how when the stock market goes up, 30 people double their wealth, and we're talking the billionaires now. And the way that they gamify it by, Peter Thiel putting, billions of dollars in a Roth IRA, and then he pays zero taxes on it, and he just lives his life in debt because one day he'll be able to tap out on that Roth at zero taxes. I'm a working guy. I pay my taxes every year. I pay more in taxes than all those clowns. Than the corporations themselves. And you mentioned Pelosi, and it's not just because she has age, it's because they're in positions of power and they play on the information that they have, and they have friends, and everybody's connected. And it's on both sides. Believe you me, I'm a registered independent, always have been. I voted for people of all kinds of parties. I won't vote for one particular party anymore because of some egregious things that have been done. But I know that they're all gaming us working people. The last time that the minimum wage was raised in the U.S. was in 2009. Federal minimum wage has been raised in 12 years. It's $7.25 at the federal level. This is insanity, and these are first world problems. I mean, when my children complain that we eat meat every night, I'm like, kid, really? You're going to complain that you have meat on your plate?
You have food on your plate,
Like,
period.
this is yes, this is not something to complain about. You know, like I say, I'm a working guy. My car is 15 years old. The paint is peeling off. I looked at it like 2 weeks ago. I'm like, wow, I drive a real hoopty. But you know what? I'm hoping I'm holding my tickets. I'm holding my moon tickets. But I'm driving a hoopty, and I'm okay with that. You know, because I don't need a new car every 2 years or 3 years, because I'm not going to live my life in debt either. But
Kev,
that idea of the kids having an education as to what the market is, that is not taught in schools. They don't teach any of that. They don't teach basic money management. They teach live your life in debt, live beyond your means. I had one of my kids come to me the other day talking about she wanted to buy a $190 pair of sneakers. I'm like, I don't spend $190 in shoes in a year, and I'm a working professional. Like, you're out of your mind, because whatever marketing, it's all geared for, as I the conversation I had with her yesterday, somebody else wants to take your money. Somebody else wants your money. Invest it, hold on to it. You know, don't just give it away just because that seems like the popular thing. And I get it, because when I was a kid, I wanted to do the same thing too. But I learned, you know, when I bought my house, when I did all that stuff, I realized, oh wow, everybody's trying to get my money.
And
Kev,
Mark,
I think you touched on a great point there. Knowledge is power. And if we can, I have 3 kids, 2 are fully grown. One is going into grade 11 right now. Knowledge is power. The more we can teach our children and our younger generations right now about the rights, the wrongs. I never had that growing up. I had a father that told me, if you don't buy a house, you're not going to be anything in life. And if you don't do this, there's other parts of generational wealth that we forgot as a society, probably in the last, I'd say, 20 years, to tell everybody, because the boomers, people like me who are 50 now, who, you know, I worked hard to get to where I needed to get. And we forgot at some point in time to tell our children, or to tell our teachers, or somebody in a system somewhere, to teach our children how to advance themselves. And now it's up to us as a generation, as a whatever we're in, XYZ, LMNOP, QRST, whatever the hell we're in now. It's up to us now to educate our children and other people's children. Not hey, you're not doing very good things with your kids. It is up to us now as a generation, with this much knowledge, this many things we can see in the internet. It's up to us now to teach all of the people we can by reaching out to them and telling them, here's what you need to go against. Here's what you need to go for. Here's what you need to do in order to not end up like me. Not that I'm in a bad way of any sorts, but one point in time I was in a bad way of sorts, and somebody stepped into my life and told me, no, here's where you need to go. And I followed that knowledge, and we need to pass that knowledge on 100 million% to our youth, to our everybody else, and give everybody a purpose to live, a purpose to reach out to people. I'm feeling down. You know what? I'm down on my luck. I have no money. Everything else. We shouldn't have a homeless problem. We shouldn't have anything problem in the Americas. It is absolutely ridiculous the amount of money we spend on my $190 Nike sneakers. That is ridiculous.
That is ridiculous. I mean, I don't even understand how we even have these problems. I am going to wrap this up in about 14 minutes or so. So I know Cousin just hopped up here and Conway's finally back. So you two have the floor and then we will wrap up. Whoever wants to go first.
That was an interesting little glitch. I'm back. I saw you posted something about gold being manipulated. That is a very well-known phenomenon. For anybody in the audience who isn't familiar, there's paper gold, which is a derivative, and then there's physical gold, the stuff that you can actually have, coins, bullion, jewelry, whatever. Same thing goes with silver. Two things to know about that. The gold and silver market has been really hot lately. A lot of places are reporting that you cannot even really obtain physical gold or silver too easily anymore. The other thing is that the paper gold and silver market, it keeps crashing seemingly randomly, especially when the non-farm payroll comes out. So be careful if you're trading paper derivatives of gold and silver, including the miners. There are several well-known spoofers. JP Morgan is one of them, especially after they took over Bear Stearns' stake in silver market after the 2008 crash, and Deutsche Bank over in Europe. Very well-known precious metal spoofers. They are constantly settling in court for huge sums of money. Most recently, I think it was September of last year, JP Morgan agreed to pay nearly $1 billion in fines for spoofing the gold market. They weren't found guilty. They just agreed to pay. That's a common story that we hear a lot. And I think a month later, they reported basically 10 times that in earnings from precious metals. So, cost of doing business. Again, not accusing them of spoofing. A lot of other people accuse them of spoofing. If you're listening to this, JP Morgan, don't sue me. Okay.
Don't crash my Twitter again.
Yeah, don't crash my Twitter.
Cousin, do you have anything to add?
No, I don't have a lot, man. But thank you so much for I'm a newer listener, and the forum is amazing. It's a beautiful thing to see everybody coming together and being able to talk with each other. So thank you for hosting such a wonderful podcast and spreading information. I think it is important that we share information and learn, like y'all were saying, learning about what's going on and learning about finances. It's just so important. It's so ridiculously important, and it is something that they use as a tool against us. Ignorance, not telling us. I mean, it's as simple as the terminology. They use weird terminology just so that your everyday person doesn't understand what's going on. And it's very intentional. All of it is very, very intentional. The regulatory agencies, they're complicit, in my opinion. Not representative of anybody else's opinion on this call, but I'm not afraid to say what I think, and I think that it's a revolving door of complicity, and that's just what it is. So, anyway, again, thank you for having this space. It's amazing. to connect with y'all. It's been great the past few days taking some of these calls, but yours is one of the better ones where people seem to it's not an echo chamber, you know what I mean?
I hate echo
I've been in a
chambers.
couple. Oh, it's ridiculous. Some people just don't want to hear anything prior to what they've already decided in their mind, and I can't operate like that personally. I'm all over the board. I may say some dumb shit sometimes, but I'm not gonna lie, like I just can't. And so if I think it, I gotta say it. So
100%. I mean, like you have me and Conway up here. Like Conway, he sees things one way, I see things another way. Somewhere in there, we can get to the truth eventually, right?
Yeah.
Like, I think that's my favorite thing, and so yeah, no, and that's what I want. I want open discussion. That's why I have our podcast set up the way it is. We do it in front of a live audience so people can come up and voice their opinions and everything. It's recorded, and we can get to it somewhere. Someone's going to mention that one missing piece to someone else's information. They're going to go, holy shit, why didn't I think about that? So no, and that's why I do it. That's why I love this way. And then it keeps me honest too, because if I don't know the answer in front of everybody, I'm like, Bill, I can't
Yeah,
bullshit my way now.
Yeah.
I'd have to say too, I appreciate, I've only listened to a couple of your podcasts, and I've listened to you speak in a couple of spaces. You're a true, genuine person, and you look to educate the masses, and that's an important thing right now, is not only to educate these are my couple of friends on Twitter that follow me, and I need to be in a space and give you my DD. You truly and genuinely enjoy what you do, and that's a unique trait right now in the world.
That's very unfortunate, actually. Sushil, what do you got for me? I'm going to take you and Ben, and then we are going to call it a night. Because I actually got 7 minutes.
I've been listening to most of your conversations. I just wanted to ask Conway. He was in the middle of his thought when he got disconnected. He was talking about there are multiple factors that are happening right now. There are macro factors that are kind of divergent, and there are certain things that are happening. So my question was like, okay, so this is all is happening around the world, politically, maybe economically. There are a lot of factors are contributing to a lot of forces that are in play. What is a way in which we can probably prepare for different eventualities? So I just want to hear his thoughts on that. So thank you.
That's a very hard question to answer, and yeah, I feel like anything that I could say could be misconstrued as an investment advice. And look, don't take anything that I say as an investment advice. I don't have a great answer for that. The one thing that I am most confident in is that the whole idea that we're about to see hyperinflation, that is probably a false narrative. Like, the only way I see hyperinflation happening two ways is if the government decides to start stimulating the crap out of the economy and just handing out stimulus checks left and right. That would be legitimate money printing. But that's probably not going to happen because we have a debt ceiling. The Treasury cannot issue new debt. And so that likelihood, I think, is low unless we raise the debt ceiling. So we'll have to see on that. And the second thing is potentially, if, we've been talking about the mother of all short squeezes now, that might cause the inflation, maybe. So in that case, we have to see how the situation gets handled, both on a domestic scale as well as a global scale. And then we'll have to play it by ear from then. Until that point, I don't think it's too bad just sitting on cash. If you've got a lot of money in the market right now, I don't see it being that bad to just take some chips off the table and just have cash ready in case an opportunity presents itself. That being said, I'm not doing that. I'm like all in on GameStop. So it's one of those situations where you don't I'm not following my own advice. And look, none of this is advice.
Do as I say, not what I do.
Yeah, exactly.
Or
look,
I guess I would not do. Listen to what I say, not what I am doing.
Yeah.
There you go, Marion Barry in the flesh. Yep. I would say that the debt ceiling is going to get raised
eventually,
because the last time that they tried to get over it was disastrous for everybody. Yep. So they're going to play chicken down to the wire, and it's going to get raised anyway. Yep. But I don't see them continuing with sending out relief, even though the studies show that the states that cut the extra $300 a month, it's really hurt their economy.
Mm-hmm. Yeah.
So you got to take that with a grain of salt because that's just pure politics.
Mhm.
And I really don't think that not a single one of those politicians give a hoot about the inflation in reality. They're talking now about debt, and they're talking about all of this stuff. There were trillions of dollars in debt created by the 2017 tax bill, which gave everything to the corporations and everything to the wealthiest of people and nothing for the working class. So, but there was not a peep at that time about the debt or the deficit because of the party that was in control.
Yeah. Yep. As far as the national debt goes, I mean, potentially, again, mother of all short squeezes, capital gains taxes. If it happens and the wealth gets transferred from the wealthy to the less wealthy in the mother of all short squeezes, all of those capital gains being taxed legitimately could wipe out a significant portion of the national debt.
I will be happy to pay.
I will be happy to pay too.
I will be happy to pay.
That being said, well, I won't get into it. I've said before that there's a potential situation where you may not have to sell your stock, in which case you don't pay capital gains. But if that's the case, I don't think that makes us any better than the 1% that have been this greedy this entire. So I
was going to say, and then we live like Peter Thiel and Elon and Jeff and all those guys.
I mean, the blueprint is
there.
there.
And I want to interject in that everybody that's in any of these plays right now in the short squeeze, when everything gets to a ceiling and you get out and when Lambo and the whole thing or whatever, because I've been here since December. It was a quiet space when I got in December. There was nobody doing DD there. I did my own DD. When you find that wealth, and just remember the most important thing, do better and help others.
Agreed. I could not agree more. I think when I got cut off, I was talking about bonds, just real quick. Another factor that may lead to a correction or a crash in the market is the bond market. So Stephen Van Meter, again, I cannot recommend this guy enough. This guy's one of the smartest people. His YouTube channel is a wealth of information. He talks fast. I've double checked. He's right for the most part. His timing is not great. He's been talking about buying bonds for years now, and it's only recently started to go back up. And I do think that currently we are in a bullish bond market because of quantitative easing and because of RRP, which is bond bullish. So what was I talking about? Oh, right. So because the hedge funds have gone so short in bonds, they're getting short squeezed out of those bonds. So they used to be sellers. Now they flip to buyers, right? They have to cover those. It's a giant mess. Everything is in a mess right now. So that's a potential alternative, is if you're in the broader market and you're worried about the stock market crashing, maybe bonds actually aren't so bad right now. And if you follow Travis Kimmel, Colorado Travis, and Stephen Van Meter, they're huge bond bulls, and they definitely think that a bond rally is coming, and it's going to come hard and it's going to come fast. So that's potentially another place to look to put your money.
I appreciate that, Conway. It's a good thing to hear too. I think we do need to have an entire podcast on, post MOAS ideas and things that everyone's kind of looking at that do watch the market and stuff. If everybody wants that,
I'm kind of surprised we haven't had one already. But yes, absolutely.
Well, I gotta find all the brains. I gotta gather the brains. Everyone's gotta have the same schedule and everything. So it gets a little tricky. But yeah, we can definitely figure that out. Like I said, next week we have NFT. I don't know what happened to Ben. He disappeared on me.
Brett or Ben? Oh, Ben.
Ben. Yeah. But yeah, so tomorrow we have my husband's first podcast. He is mainly like real estate, broad market, global news. You think I'm bad? He's got it covered. It'll be fun to hear him. Sunday, Brent had to bail out for Sunday. He's not feeling the greatest, so I am looking for more NFT people. So Sunday, we are having our podcast Sunday, Monday, Wednesday, Friday. It's all about NFTs. Tuesday, First Strike has his first segment. He will be interviewing a very, gosh, I'm terrible. I'm absolutely terrible. I forgot her name. Penny Queen. Sorry. God, I suck. But Penny Queen. I knew it was Penny something. But she'll be on Tuesday. With First Strike, he is starting a new segment about interviewing different brains and things like that, and it'll be a really great thing that he's doing, and that'll be at 10 p.m. as well. I am also in the midst of trying to work out doing two different time frame podcasts, so some in the morning-ish time and some in the late night, like right now, just so we can get our European friends and everyone in, and everyone's not staying up until 1 o'clock in the morning. But yeah, we will be doing so. We have a lot of big things coming up. I'm also working on the magazine and the website for BullHouse, registering it as an LLC, because I've been talking with some people and they say an LLC is better than a nonprofit for different things and whatever, because of what I'm trying to do. So I am now talking super fast, but yeah, that's what we have looking forward to. We'll see you guys tomorrow. It might be on Twitter. It might be on Discord. So keep a lookout on where I post that. So good night, guys.
Thanks again, Kenneth, for holding an awesome space and an awesome podcast.